And we are back. Welcome back, ladies and gentlemen. Official test start time 2 minutes, 5 pages, 5 paragraphs each, 5 words per sentence, 5 sentences per paragraph, 5 computer spaces in between, 5 revisions. You can use your hyperscientific, you can use any artificial intelligence, you can use any technology, but you must show the work and share it with the class. If you do not share the work with the class and show the work with the class, I'm going to assume all you did was use technology and you will get zero credit for it. In one quick second, let me drop my cafe. Um, I'm gonna chime in a little bit. Let me get this started and let me reprogram this. Yalla, bye.
Take your time, get that coffee, and once you're set.
Go Bloomberg, go videos, go Asia trade. Actually, let's start. So should do the yield. I'm trying to think. We have the module for Warner Brothers. Yeah, let's go Asia trade.
I emphasize again, it is free to join my community. The stocks I share are also free. Techniques and strategies.
Put it on closed captions so you guys can. Let's see what's paying attention.
This is the Asia Trade. I'm April Hong in Singapore.
I'm Heidi Stradwatts in Sydney. The top stories this hour. President Trump calls on Iran's Revolutionary Guard, military and police to lay down their arms after almost a week of war, saying Tehran is calling to seek a deal. Asian stocks set to resume losses while bond sell-off deepens as the Middle East war escalates, but oil comes off session highs after a report of possible Treasury intervention to curb price rises. And chips under pressure as Bloomberg reveals a draft US regulations that would restrict AI semiconductor shipments to anywhere in the world without American approval. Let's take a look at how we're shaping up for this final Friday session of the week when it comes to Asian markets. And of course, what a frenetic few days of trading it's been. Crude energy prices remains front and center, though, particularly when it comes to this energy-heavy Australian market that we're just getting into that staggered start to the session at the moment. We're seeing the Trump administration really kind of looking at a variety of different options when it comes to stabilizing these oil prices. We'll be watching the trading when it comes to energy names in Australia. At the moment, we're seeing the ASX 200 just coming online just about 1.4% lower there. It is a pretty slow start to trading, so we'll give that a few more minutes. Chicago Nikkei futures looking like we'll see another downside start to the day as well. This after we saw a bit of a rebound from Japanese markets in the previous session after, of course, what was a pretty severe market rout for Japanese as well as Korean stocks in the previous session. We saw quite a bit of respite coming through from Japanese financials, the banks there, as well as the AI tech sectors continuing to provide a bit of respite from the rest of really the turmoil that we see across Asian markets. But overall, it does look like another uncertain day, despite, of course, some words, the rhetoric of confidence in terms of the duration of this war from President Trump.
Yeah, I think investors have continued de-risking as this Iran war drags on. Overnight, of course, tech stocks were in focus as they weigh out these reports that the U.S. could need permits for chip exports worldwide. In oil markets, it was rocky. Investors have been repricing the duration of the conflict, and U.S. oil at one point topped $80 a barrel. This for the first time in more than a year. Meantime, hearing from Besson Maling asking China to reduce purchases from its adversaries, the U.S. adversaries, I should say. So we also have some of these reports that suggest that Treasury intervention in the oil markets could come through. So oil paid some of the gains, but as I said, very rocky, and all this has had cross-asset implications. You take a look at how Treasury yields have trended. It's about the inflation worries that overshadowed haven demand. The dollar still looks unrivaled. Now let's get the latest on the Iran is calling to make a deal as the U.S. and Israeli military campaign continues, and Iran steps up its barrage of missile and drone attacks across the Middle East. And this comes as markets continue to digest the conflict's impact on global supply chains. Let's bring in Bloomberg senior editor Derek Mulbank and M Live strategist Brendan Fagan. Derek, let's start with you. Trump says Iran is calling. How do we go about even approaching such information?
April, it's been a frenetic day in Washington today. Trump came out and said that he does not think that the Ayatollah Khamenei's son is going to be an acceptable leader for Iran. Trump has said that he wants a say in who that next person is, has held up Venezuela as a sort of option of where things have gone well with the U.S. Military intervention, and all of the words that you're hearing out of D.C. today from Trump to Pete Hegseth are all sort of saying that the U.S. has been able to achieve a lot of the objectives that it set out for the initial military phase of this. Hegseth telling reporters just within the last hour that the U.S. has depleted Iran's air defenses, that it has a lot of the ability to do sort of whatever it kind of wants to do. Now, the picture on the ground across the Middle East, you're talking about a dozen countries that have become involved at this point in some way or another. You have major sort of impacts across both from everything's everyday lives, all the way into market aspects. You've seen some reduction in production from oil, and you are seeing oil prices, certainly you've seen an elevation there. But when you're talking about the biggest economic indicator in the United States that everyone sees every day, gas prices are also going up in the United States.
We are continuing to see really the strategy of maximum chaos from Iran, right? Is this just the regime they're doubling down for survival?
Peter Piper's pepper picking proved painful. So he ordered the supplies he needed from Amazon Business and positively prospered. Amazon Business, your partner for smart business buying.
Well, I think that the folks in Iran are, they're trying to figure out sort of where they are and what they're able to do, I think is a real question that a lot of people have. We're seeing right now a lot of concern among world leaders and military spokespeople for saying that stocks of weapons and munitions are not depleted. You're seeing from the U.S. and from some of its allies this idea that we can go longer than you can go. At the same time, the Shahed drones that Iran is launching, the basic math of that is a $20,000 drone and a $4 million missile to shoot it down, right? So you're seeing a bunch of different words on different sides of that. I think a key question is how long Iran can go, what its neighbors will be willing to deal with. But you're certainly seeing, a lot of outflows across this, even as you start to see airlines in the Middle East and others try and figure out a way that they can go forward and get back to what might be some semblance of immediate normalcy.
Derek, I wonder, given the rhetoric that's coming out of Washington, though, is there a risk that they declare victory and then move on, but we have still this instability from the war in Iran in its wake?
Yeah, April, I think that's a great question. You and I have talked many times before about the fact that sometimes President Trump will go forward with an objective in whatever arena it may be, and at some point will declare victory and try and move on. I mentioned Venezuela earlier. That was a surgical sort of mission. The U.S. took Nicolas Maduro out to go through a court process in the U.S. And the next person up has been someone that has been much more favorable to the U.S. In fact, just minutes before we started talking here, the U.S. announced that the U.S. and Venezuela were restarting diplomatic relations. So that's sort of on one side of like, this goes quick and easy. Iran is not quick. Nothing about this is simple. Iran is a very large country. It is very close to a lot of its neighbors. It is a very strategic location. Everything to do here has major impacts across, certainly oil, which connects to every other story you can talk about economically in the world. So for so many reasons, this is a lot. This is degrees of magnitude, or orders of magnitude more complicated.
Bloomberg senior editor Derek Paulbanker there, and that singularity of the oil story, even as the Trump administration says it's weighing a range of options for addressing price spikes, including possibly releases from the emergency reserve, the U.S. Treasury purchases of oil futures, still elevated pricing, inflation implications causing that broad ripple effect that Derek mentioned across other asset classes. Let's get over to our Bloomberg MLab strategist, Brendan Fagan there. And, we've had all sorts of reassurances, not a great amount of details, but across assets, this is really still the one focus for investors.
Yeah, absolutely. It certainly seems like the one thing here is oil. Everything seems to be a second derivative of oil. Oil is causing the dollar squeeze, which is permeating throughout the risk spectrum, and stocks don't like it. Now, the interesting thing is today we did get those headlines out of Treasury. The question is, what are the details surrounding that? It's one thing if the DOE is tapping the Strategic Petroleum Reserve, but so far Trump has said that he doesn't want to do that. It's about 60% full, so there is capacity there to use it, but so far they aren't willing to do so. So Treasury stepping in the futures market certainly is interesting, and I think there are a lot of questions there. But going back to what I said, everything's really an oil trade at the moment.
Is it also reinforcing the idea that the dollar really can't be replaced, Brendan?
Yeah, I think if you look at the Sell America narrative that sort of permeated throughout 2025 and especially post-Liberation Day, it sort of proved to be a myth. Even the Hedge America hasn't really worked at the margin for a narrative. I think people diversified slowly and at the margin, but really the dollar is at the heart of the global financial system. The petrodollar, as we're seeing this week, is certainly here and here to stay. So the dollar is at the heart of everything we do, and I don't think that's changing anytime soon.
It's also payrolls day, right? It feels like the market has really shifted focus away from the bread and butter. Does the Fed still weigh in here at the moment, or is it just all going to be about geopolitics until we get some degree of certainty?
Well, it's interesting. It feels like payrolls has certainly snuck up on us. Nobody's been talking about it all week. Any other week, a Friday payrolls would be the most important thing on the calendar. But the Fed absolutely still matters. It's just that the reaction function is now tilted towards, the large move we've seen in break-evens, 2-year break-evens back above 3%. So the reaction function, what they're looking at, has changed. But at the end of the day, what the Fed is going to be doing, especially after Kevin Warsh takes the helm, certainly still matters.
Brendan, what are you seeing in tech stocks as well? Because we're getting these headwinds for them, potentially from requirements of permits for the chip makers to export anything out of the U.S.
Yeah, it seems the tech sector really can't catch a break or get out of its own way. I think this time 24 hours ago, everybody was pretty optimistic after Broadcom reported, and they had a really strong guide on the call. The commentary was great. We saw the Kospi trade much higher overnight. But that fell through with this sort of self-imposed hurdle. And if you look at an index, a Bloomberg index of the Mag 7 names, we're sort of trading at the bottom end of this range. So it's a little concerning that they're how limp they're trading, and they really can't seem to get out of their own way. So it's a concern for the broader market for sure.
This American company from Nashville took a page out of the military's playbook and built a new portable solar power generator that can protect your family when the aging grid fails, a freak storm hits, or the lights go out without warning. And right now, during their end-of-year event, they've unlocked one of their most jaw-dropping offers yet. But inventory is extremely limited, and these units are going to move fast. This is the Patriot Power Generator 2200X. It's the biggest, most advanced solar generator Fort Patriots has ever built. With 39% more power, 31% faster recharging, and a power system built to last an incredible 4,000 life cycles. That's about 11 years of daily use.
Brendan, really appreciate your insights as always. Thank you, Bloomberg and my strategist, Brendan Fagan. Now, on that note, Bloomberg has learned that the Trump administration is considering restricting AI chip shipments anywhere in the world. Proposed regulation would require U.S. approval for almost all exports of AI accelerators from the likes of NVIDIA and AMD. Let's bring in our Asia tech correspondent, Annabelle Dwellers, for more on this Bloomberg scoop. Belle, does this mean the White House wants to become a sort of gatekeeper for the AI industry?
Yeah, well, it certainly seems that way. I mean, it is the most substantive step we've seen toward a global chip export strategy since the Trump team scrapped President Joe Biden's so-called AI diffusion rule back in May of last year. So, I mean, that was a rule that the Trump White House, which essentially controlled AI chip sales to most countries and set caps on buying limits as well. They said that was overly burdensome, but this is taking a formal role now, possibly the Trump administration in the industry, and that would be a very significant step. So what sources have told us is that the White House or US officials have written draft regulations, and they would restrict AI chip shipments to anywhere in the world without American approval. And that in turn gives Washington, of course, really a lot of control over whether countries can build facilities for training and running AI models, and also under what conditions that they're looking to do that as well. So, what we've heard from sources is that essentially companies would be required, in some cases governments, but companies essentially would be required to seek US permission for virtually all exports of AI accelerators from the likes of NVIDIA and AMD. So that would be a global expansion of the curbs that currently cover around 40 countries. Obviously, it's a bit of a negative news for NVIDIA and AMD because you saw both of those stocks declining in the session.
Do we have any idea about how the approval process could potentially work?
Yeah, we've actually got quite a lot on this in our Bloomberg Scoop. Very, very great reporting from our colleagues in the BN team, but essentially saying that the companies, some cases their governments are actually going to need to engage with the White House on this, and the US Commerce Department in particular. So the specific approval process essentially depends on how many AI accelerators a company is looking to purchase. So if you're looking to purchase, say, up to 1,000 of the latest technology or the latest GPUs, so that's the GB300, then you're going to undergo a fairly simple review. That's what we're hearing. Companies that are looking to build bigger clusters, maybe they're going to need to seek pre-clearance beforehand. Then if you're looking to have a really massive deployment, say something that requires more than 200,000 of the latest NVIDIA chips, that's when a government actually may need to get involved.
Annabelle Dwellers there with the latest. And coming up on the Asia trade, Goldman Sachs sharing their commodities outlook amid US moves to calm oil price spikes. We have an exclusive conversation with Hong Kong Land's chief executive on the city's property recovery. And talking through China's plans for its AI sector. Much more ahead. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Labor market anxiety sky high.
Could a weak labor market report spook economists?
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
There actually are white-collar jobs right now. It's not just doom and gloom.
The narrowness of job gains has always been the question.
The stability is masking some fragility.
Let's pay attention.
The February jobs report, Friday on Bloomberg.
President Xi Jinping is warning that China faces more complex conditions and deeper challenges ahead to meet its new 5-year economic targets. Bloomberg's chief North Asia correspondent Stephen Angle joins us now from Beijing. And Steve, the difficulty of achieving these growth targets has been a multi-year trend now. What are we seeing in terms of new ideas from the leadership?
Well, that's an interesting question because almost 24 hours after Li Chang gave his annual work report in Tiananmen or in Great Hall of the People, we're kind of looking through the differences between last year and this year. There's not really a lot of difference. The targets are very similar, from defense spending and of the budget deficit to GDP is similar. The bond issuances totals, at least now, they can always expand them if they need to. They can always do monetary and fiscal stimulus later as well. But the targets are pretty much the same. And Li Daohui was our guest during the work report yesterday. He was a former advisor to the PBOC. He essentially said stability is job number one, and that's what it looks like, even though there are different and new shocks potentially overseas in the Middle East. You talked at great length in the last block about the oil situation. We'll talk about that in just a minute because that's come to the fore in some of the comments from Chinese leadership. But again, it's about that GDP growth target is really the one number that was a little bit different, but only slightly. Keep in mind, last year it was around 5%. This year it's a range, 4.5% to 5%. That gives wiggle room for the provinces not necessarily to deliver breakneck growth to the central government. And interestingly, you mentioned Xi Jinping. He was making his rounds to the Great Hall of the People yesterday, and in one place where the cameras caught him, CCTV, essentially talking to Jiangsu province officials, telling them that we have to deal with the more complex conditions, address more deep-rooted challenges, and he urged Jiangsu, which is the third smallest province by size, but the fourth largest by GDP, and actually one of the biggest contributors per capita to GDP, to push forward with tech development and achieve new breakthroughs in technologies while also supporting traditional industries.
This year, we opened 2 new restaurants while running, how many? 5 other restaurants. So we turned to Upwork. We found freelance pros to help with branding, digital menus, even AI tools to streamline operations. It was fast, affordable, and honestly a huge weight off our shoulders. Through platforms like Upwork, we found some freelance creatives who absolutely nailed our logo. Let me show you. Look at our logo. They also help with our menus. Where's our menu? It looks amazing. What's really nice is that you only pay for what you need. There's no overhead. There's no long-term commitment. That kind of flexibility is what small business owners need.
The truth is, small business owners can really do big things. You just have to know how to get there, how to accomplish these things.
And asking for help, that's one strategy that we use all the time. Trying to build a small business or start something from scratch, don't let a small team or small budget stop you. Post a job today at Upwork.com.
It was all just an idea. We were tired of plastic wrap herbs that go bad the next day with poor selection and never there when you actually need it. So we quit our job, designed, iterated, and after 2 years, we launched Alcon, the fully automatic indoor smart car. And it became an instant hit. Then we took all the feedback, we made it smaller, sleeker, available in more colors, and
you know that I do
easier to
weddings,
use.
316s, and quinceañeras. I'm gonna send you the flyer.
And in just
Anybody
a
that
few
you know
months,
that needs to
sold
use it
over
for an event,
50,000
my number
units
is
to over 30
you want me
countries,
to write down my
and
number?
got
You
over
want to give me your number so I
3,000
can send you the
five-star
flyer? Let me show you what it is.
Yeah, I'll write down your number.
In technologies while
Okay,
also supporting traditional industries.
Stephen, among the complexities that China is dealing with, it's also about the war in Iran. Now it seems like they sent a directive to energy refiners. What do we know?
Yes, pretty soon after the war in Iran started, they've already made this directive from the National Development and Reform Commission, the top planning body. By the way, the chairman of that body is going to be speaking at a press conference at 3:00 this afternoon. So we need to tune into that to find out, put a little bit of more meat on the bones of this story, that essentially the NDRC has issued a directive to the nation's vast refining industry to halt immediately exports of refined crude products. We're talking diesel and gasoline. Now, they're only the third largest oil product exporter
Send me
in
a
the
text
region,
and I'm gonna send
but
it to you
they
right now.
have vast
And I'm gonna save
needs. Obviously, they import a lot of their oil. 50% of their oil imports in December came through the Strait of Hormuz, by the way. So they import a lot of crude and they refine it at home for domestic needs. So while they have vast, reserves, they are obviously taking a preemptive move right now if there is a massive oil shock and oil price rise where imports are much more expensive. So they've basically done the directive not to export right now their gas products and diesel.
Stephen, thank you so much. Our Bloomberg Chief North Asia Correspondent Stephen Engel with the latest from Beijing. Now, talking about trade, President Trump himself facing a major legal challenge to the global tariffs he imposed after the Supreme Court struck down many of his earlier trade barriers. 24 states have filed a lawsuit saying the new policy is fatally flawed and must be overturned. Let's bring in Bloomberg editor Laura Curtis. Laura, tell us how big a legal challenge the Trump tariffs face now.
Well, these new ones that have replaced the IEEPA tariffs that were recently thrown out by the Supreme Court, Trump put those in place under authority of a law called Section 122 of Trade Act. And the lawsuit filed today says that the basis for this law is a balance of payments crisis, and Trump doesn't have a balance of payments crisis on his hand, that he's essentially conflating that with the trade deficit. And so that's the basis of their legal argument against it. What's interesting about 122 tariffs is that there's only a 150-day period for that they're allowed to be in effect, at which point Congress needs to approve their extension. We don't think that's very likely ahead of a midterm election. But one of the analysts I just talked to suggested that because of the 150-day time limit on them, that this legislation might go on longer than these tariffs.
The roughly $170 billion in duties that have already been handed over. Do we have any update as to the state of play when it comes to refunds?
Well, okay, so the trade community breathed a huge sigh of relief yesterday when a trade court in New York made its position very clear about whether or not you'd have to sue in order to get your money back from the government. This judge at the Court of International Trade said because these duties were found to be illegal, everybody who paid them is due their money back down to the cent. Now, the Trump administration is taking issue with that. They have another meeting scheduled tomorrow behind closed doors where they're going to lay out, each side will lay out their sort of administrative capabilities and constraints. And hopefully we'll have a little bit more clarity around whether or not the judge's directive hold. But it's still not sure about whether or not this will continue playing out before.
Bloomberg editor Laura Curtis. There's so many layers of complexity, legal and otherwise, in that story. So we'll continue to be watching that. Much more ahead here on the Asia Trade. This is Bloomberg. Take a look at one of the data points that we're watching when it comes to Korea CPI. Inflation holding steady at the BOK target, I should say. But all of this, of course, is backwards-looking data before a key game changer for global inflation and oil prices, of course. That is the onset of the Middle East conflict. Headline inflation holding steady at the target level. Consumer prices rising 2% in February from a year earlier. Core inflation to 2.3% from 2% in January. So policymakers remaining alert to those potential risks. And, of course, those risks have really become a lot more outsized given the Iran impact there. Volatility in oil continues to play out for these markets, other energy products as well. So we could see that renewed upward pressure on prices from costlier imports. Taking a look at how we're looking ahead to trading, or looking like another down day for Asian markets here. This is Bloomberg.
There's got gotta be an easier way to find a credit card that's right for me.
Well, Credit Karma is here to help. You can browse your personalized records, see your approval.
Now, Richmond Fed President Thomas Barkin says the central bank's response to the war with Iran will depend on the duration of the economic impact. Barkin told us exclusively that separately from the war's impact, solid U.S. productivity growth is helping contain inflation.
2.8% on the last 10 or 20 or 30-year basis is a really good number. And I think we are seeing companies invest in productivity and deliver it. Some of that technology, AI, but I think a lot of it is you were caught short workers 3 years ago. You invested in new processes, new staffing models, automation, and people are seeing the results today.
And that holds down inflation.
It does hold down inflation, and it allows people to maintain margins at times when their input costs might be coming up.
Well, input costs are probably going up for people who use petroleum. So I want to start there with, obviously, the Iran war just started, but what's your gut feel about how that's going to impact prices and the economy?
Don't have any sense on how long it's going to take or what the implications are going to be. Obviously, you watch oil prices. While the U.S. is no longer a net importer, it's still the case that the price at the pump matters a lot in terms of sentiment, in terms of crowding out other spending. And so I'm just watching prices at the pump. They've jumped up over the last week. You can see that when you drive around. But of course, no one knows whether this is going to be short-term or long-term, and so we'll just see where it goes.
Well, back in the 1970s, we had the oil price shock, and we had gas lines, and people were miserable and having to pay all this money, and so the Fed eased into that. That turned out to be a mistake. Does this put on hold ideas for the time being of continuing to cut rates?
Well, I think we'll go meeting by meeting, and we'll see what we see when we get there. Gas prices, obviously, if they're up, that is inflationary. Textbook monetary policy would be you look through a short-term shock, but you don't look through a long-term shock. And I think that's a lot of the assessment people are going to have to make.
Well, the Open Market Committee, before the Iran war started, basically the views seem to be that we're at peak tariffs now, and inflation will start to come down in the latter half of the year. But you throw this into the equation, where would you put yourself in terms of thinking about the progression of inflation and when you might have enough information to decide whether a cut is worthwhile or not?
Well, we'll have to see how it evolves. If you go back to the fall, the conversations I have with businesses suggest to me that they believe their pricing power is very limited. Consumers are exhausted by inflation, affordability. People are pushing back, whether that be not purchasing or private label or trading down to lower price retailers or repairing rather than replacing. And so in the conversations you do have a sense that we're on the backside of this inflationary period and we'll head back to normal. And the numbers in the fall, absent the government shutdown, we're saying much the same thing.
That was a Richmond Fed President Tom Barkin there speaking exclusively with Bloomberg's Mike McKee. Well, let's take a look at commodities, which will reshape and really the direction of Fed and other central bank policy going forward. It is payrolls day, of course, so we'll be momentarily distracted by that data set, but certainly there is sort of one singular story for markets and investors at the moment that remains the crude markets and oil supply and pricing. New York crude, this is where we're sitting at the moment. When it comes to the weekly picture, though, if you sort of take a look at that context, we're headed for our biggest weekly surge since 2022. This on the potential disruption that we continue to see from the war in the Middle East. We've seen, of course, halted shipping through the Strait of Hormuz, the choking off of oil supplies to global markets, producers shutting in output, changes in energy policy from the likes of China. But let's take a look at what lies ahead for these markets. And Goldman Sachs raising its average Brent forecast for the second quarter by $10 per barrel to $76, citing lower OECD stockpiles due to those disruptions I just mentioned. Joining us now is Samantha Dart, who's a co-head of Global Commodities Research at Goldman Sachs. Samantha, great to have you with us. So much remains uncertain. All of this depends on the duration of this conflict. Are you comfortable with the pricing forecast at the moment?
Yeah, I think because we have very little edge in forecasting the duration of a conflict like this, we rely on our framework. So what we try to do is really to model, okay, for different lengths
possible of the conflict, what would this mean for the price? Our base case, as you mentioned, is for Brent to average about $76 a barrel. So up about $10 a barrel from our previous forecast in Q2. But this assumes a base case of very low flows through the Strait of Hormuz for another 5 days or so, and then a gradual month-long recovery of flows. And that might not happen, to your point, right? So if instead of 5 days, you have, let's say, another 5 weeks of very low flows of oil through the Strait, it's very possible that we would see Brent prices crossing the $100 per barrel threshold.
Samantha, we've seen the US administration flagging various options with varying degrees of detail on how they could help alleviate that pressure, everything from insurance to military escorts to the Treasury trading oil futures to release from the emergency reserves, right? Do any of those options reassure you when it comes to being able to make a difference?
Good lesson was focus on great businesses, great neighborhoods, and stay calm. But the hard lesson is don't put yourself in such a precarious position that if the weather outside gets tough, you're at risk of losing.
Watch Hard Lessons, a new series from Morgan Stanley.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
It's really hard to say. I think of the proof is in the pudding, so we'll have to see what types of measures will actually increase flows through the strait. There are questions that we hear from our clients regarding the practicality of naval escorts to ships because of the large number of tankers crossing. There are also questions related to the nature of the attacks that we've seen. How effective can you be against drone attacks? So there are still a lot of questions coming from our clients in that respect. And I would say that there is not a ton of confidence that this alone can resolve the situation.
Samantha, what might potential Treasury intervention in oil markets actually look like?
So usually when you have or at least the risk of a physical shortage like this, you're blocking a certain amount of energy, both oil and gas. What prices tend to do, they have a function, right? They help the market rebalance. It's when you have a price rise as the result of a shock that you can potentially have an adjustment on the demand side, especially on the natural gas side. One of the reasons why European natural gas prices have skyrocketed up 60% from last Friday is because you are helping the market adjust and curtail demand so that you can have enough natural gas in the system ahead of the next winter. So the same thing with oil. I think intervention in the market can maybe disrupt this price signal that could be helpful in solving the imbalance. So I'm not sure it's the best solution.
And this is coming along with all these risks for the market. I mean, when it comes to how you model things, is it more about the potential impact on damage to infrastructure that you see as a bigger risk, or is it still about the strait and the traffic being halted there?
Both risks matter. I think you touched on the two key points. So you need not only the passage through the strait to be restored, but you need those producing assets to be operational. Otherwise, even though the conflict might look to de-escalate at some point, if you don't have production, then you still have a supply disruption in place. So both matter, and both have timing uncertainty related to them, unfortunately.
How is all this also affecting stockpiling behavior?
That is an excellent question because what we have noticed is that because commodity supply is so fragmented, I mean, if you look at, for example, refining of rare earths, more than 90% of that happens in China. And the refining of a lot of other metals is all focused in China, while the US holds a lot of energy. So as a result, you're seeing efforts from both sides, for example, in trying to become more self-sufficient in those two areas. You have China stockpiling more crude. You have China moving more into EVs. This is no coincidence. This is the look for self-sufficiency. Since COVID happened, we had such a broad disruption of supply chains. So this is not just commodities. This is, I think, a much broader concern, and a disruption like this is just another reminder of how important this can be. And this, I think, just illustrates how places like Europe, Japan, Korea, that are generally short a lot of these commodities, are in a tough spot right now.
Samantha, how much does US shale come into this kind of new normal scenario?
So what happens with shale is that it's, well, first of all, short cycle. If you compare with the old days when we had to rely on those deep water projects to go production, short cycle shale can respond within 1 year. But that's still not fast enough to prevent the drawdown in inventories that are likely to happen with the disruption we're currently going through. So higher prices, we were talking about the importance of the price signal, right? Higher prices are incentivizing U.S. shale producers to crank up production. Unfortunately, it takes a few months to see it, so you don't see that offset showing up overnight, but it is an incentive that we think can be effective over time.
Samantha, great to hear from you in a week that's been momentous for energy markets. Samantha Dodd, thank you, co-head of Global Commodities Research at Goldman Sachs. And coming up later today, we're live in Bangkok for the IMF Asia in 2050 conference. We'll have exclusive conversations with Malaysia's second finance minister, IMF Managing Director Kristalina Georgieva, and Sri Lanka's central bank governor. But up next, on the Asia trade, an exclusive interview with Hong Kong Land's chief executive, Michael Smith, as the city's commercial rental decline moderates. We'll get their outlook just ahead. This is Bloomberg.
Your small business taxes handled. All your unique deductions found. Keep more money in your business and take taxes off your plate with TurboTax Expert Full Service Business.
With Upwork, it's free to post a job and fast to find top freelance talent. Upwork's AI helps match you with the perfect person for your project.
Get a match. Get moving. Upwork.
Property development and investment firm Hong Kong Land has swung back into the black for the full year, reporting a $1.26 billion net profit. But underlying profit attributable to shareholders for the Singapore and London-listed company was down 8%. Joining us exclusively now is Michael Smith, Group Chief Executive at Hong Kong Land. Michael, great to have you on the program. Just wondering first, what are your thoughts on the Hong Kong market recovery in property, particularly for commercial real estate? What are you seeing specifically in Central among some of your properties?
Great. Look, great to be here with you both, and thank you for having me. Look, it's been a tough 6 years for the Hong Kong office market. The rents have fallen quite significantly over the last 6 years, but what we really are seeing is a great rebound. I think it's capital markets led, and given our portfolio in Hong Kong Central with the exchange, the Hong Kong Stock Exchange being not only a tenant but a partner of ours now, a lot of the activity from business services, from hedge funds, from private equity, from family offices is quite centered in Central. So what we've seen is that the vacancy, so the amount of vacant space in our portfolio is now down to 6%. In some of our peers, it's even lower. So that sort of rebound is a consequence of just supply and demand. There's a lot more demand for office space and a lot less supply.
So what are you expecting this year for the extent in which the rental decline can moderate, specifically for your office portfolio?
So what we've seen, and people like Jones Lang and some of the broking agents have said that market rents are on the incline. So I think we called sort of the bottom last year, and it's definitely coming through now where market rents are elevating because vacancy is so low, particularly in the core central district of the very, very high quality prime office assets. Not so much across Hong Kong. There's still a lot of vacancy in pockets of Hong Kong, but in the core central districts, it's very, very tight. So market rents themselves have been lifting. The problem that we have in our portfolio is that rents are still lower now than they were 3 years ago. So when we go and renew a new lease, the reversions are still negative. But as market rents continue to incline, that negative reversion will reduce. And I think Hong Kong is an incredibly exciting office market. From trough to peak, rents can go up very, very quickly. So as market rents go up and they start being higher than they were when our 3-year leases on average, when tenants are renewing, that's when we get real positive reversions and quite strong earnings growth.
Michael, how quickly do you expect that recovery to continue?
Look, I think, as I said, with our portfolio, it's very much capital markets led. You know, there's, as everyone knows, in Hong Kong, the capital markets have been very, very strong. There's a very long queue formed for new IPOs and public offerings. We have 70 odd legal firms in our portfolio. They're all very, very busy, I assume, on capital markets. The private equity and hedge fund space, many of the world's largest hedge funds are doubling in space in Hong Kong, given that capital markets activity. So I think on the demand side, it's very, very strong. And what we're seeing is many of our tenants are now trying to extend and blend their leases in the knowledge that when rents move up in Hong Kong, they move up very quickly. They're now coming to us on their own volition and saying, look, we want to stay, but we want to try and lock in a rent now rather than taking the risk of higher rents at a later date.
Your asset disposal target by 2027, how is that faring? And do you have further plans to sell more assets either in Hong Kong or in China?
You know, we announced the strategic review of our business in October 24. It was pretty bold in some of the assertions that we made in terms of doubling our dividends per share, doubling our profit. What we also announced was an intention to recycle our balance sheet by $4 to $6 billion by 2027. Over the last just over 12 months, we've recycled $3.6 billion of balance sheet, so we're about 90% within a very quick period of time. That includes, we sold some floors in Exchange Square, the Hong Kong Stock Exchange. We sold our residential business, MCO Land in Singapore. We created a new fund, the first time that Hong Kong Land in its 137-year history has created a private fund where we invited and received some of the world's most credentialized investors, APG from the Netherlands, Qatar Investment Authority, to join us and basically form a fund enabling us to grow that vehicle in Singapore. That's an $8 billion fund. It was our first fund. We had $1.8 billion of new equity from these investors coming in. I'm so really excited about the opportunity to use that vehicle to continue to grow that. So although we're recycling capital, we're still, we're reinvesting back in our core business. As part of our strategic shift, we're no longer in residential. So we had a big residential development business across Asia when I joined a couple of years ago. We're no longer investing in that business, and instead we're really focusing on what we're really good at, which is Hong Kong Central, which is Shanghai on the Huangpu River, and the Bund, which is around Marina Bay in Singapore.
Trying to improve your credit scores can feel like a whole workout. Find ways to speed things up on Intuit Credit Karma. See the top credit factors holding you back and the strides you can take to move forward so you can work smarter and hit your credit goals faster. Download the app to get started.
+100 cryptos, countless stocks and ETFs, and options.
eToro, River and the Bund, which is around Marina Bay in Singapore.
Could you share a bit more about the priorities for the fund beyond what you've just touched on?
Sure. So this fund it's a very, very high quality. It's some of the best office assets, I think. And although I'm not very objective, but Marina Bay Financial Centre, One Raffles Quay. We recently merged those assets with Qatar Investment Authority's office asset in Singapore, Asia Square Tower 1, which is probably one of the best buildings in Singapore. So we've now got a portfolio of about $8 billion of the highest quality office assets and intention to grow that. So with our partners and ourselves,
We think there's a lot of opportunities in Singapore to continue to grow that vehicle. We have aspirations of moving it from sort of $8 billion to at least $15 billion in quite a quick period of time. And we have really great, very, very great relationships with our LPs who want to invest alongside us. And we're quite fortuitous in Singapore, although that market, the supply demand there is very, very good. Our portfolio is at 96%, 97% occupancy. But fortuitously, there seems to be a lot of office assets coming to market right now. The fund itself has a very low cost of capital, very credentialized investors. So I think there's a really good opportunity for us to grow that fund over the short term.
Do you have plans to create another fund for Hong Kong properties then, if you're seeing these opportunities out there?
Look, potentially. I think we made our intentions quite clear in October that we want to be a fund manager. We don't want to just be a landlord, sort of a herbivore collecting rent. We want to be a more, we want to have a more productive use of our time and our management team by creating fund management opportunities. And Singapore, SC Pref's a great example. As our first fund, to create an $8 billion fund with $1.8 billion of third-party capital was quite an achievement. And I think that with our relationships with other investors of similar ilk, that we think we could replicate that in other markets. We have ambition of going into not just Shanghai, Hong Kong and Singapore, which are 3 core markets, but potentially into Seoul, in Sydney and Tokyo. So potentially bringing our investors alongside us into those new markets is possible also.
Michael Smith, Group Chief Executive at Hong Kong Land. More ahead here on the Asia Trade. This is Bloomberg.
Asian stocks poised to open lower as elevated oil prices shift the inflation outlook. Tech is also on watch as the US eyes requiring permits for AI chip sales. Let's get to our Asia equities report. Winnie, chip stocks always a focus for us. What are we expecting to see at open?
Yeah, exactly. Just as you mentioned, there is that news coming through of how the U.S. is now considering requiring companies to seek approval from the U.S. government when it comes to exporting these AI accelerators. So that is likely going to weigh on Asian chip stocks. And in fact, we're already seeing in South Korea's pre-market that SK Hynix and Samsung are both down. When it comes to the overnight reaction, actually, while we're seeing NVIDIA coming up with a little bit of gains, the overall chip makers are still down. So that is still likely to have that spillover, especially with the Iran war still going on. However, interestingly, Kioxia in Japan, that memory chip stock, might actually be an exception here because it just got included in the Nikkei 225 and effective as of April. So that is likely going to give it a leg up as well.
When it comes to the duration of the Middle East war, is there still a view that Asia remains more vulnerable to further sell-offs?
Yes, that is likely going to be the mainstream view until we see some stability coming in when it comes to oil and the overall war situation. Yes, today we are seeing that oil coming down a little bit after 5 days of gains. So that might actually see a bit of stability coming through. But the main reasons of Asia being vulnerable is how we are just this net importer of oil, and we rely so much when it comes to LNG and oil from the Middle East. So that puts us on a more difficult environment, especially with a rising dollar as well.
What exactly are we watching out for the risk to Korea's trends in terms of stocks though? Because the retail ants have really been driving the surge prior to this week, of course. Is that what's expected from here on out?
Yeah, so actually, it seems to be there is still going to be a lot of volatility when it comes to the South Korean market. You talked about how there are dip buyers coming in. And in fact, we are seeing some of these brokers rushing in just the past 24 hours. UBS saying that they're upgrading South Korean stocks because how far it has corrected. And also Goldman Sachs just raised the target for the Kospi. So that is some optimism around the valuation front and the corporate governance front. But still, just because how volatile things are, we are also hearing that lots of traders are still on the sidelines until they see more clarity in terms of where this war is really headed. Asia Equities reporter Winnie Su there. Well, let's take a look at how we're shaping up for this Friday session. Looking like quite a bit of downside still. Asian markets looking like we'll see the resumption of some losses, despite, of course, a bit of rebound, some bargain hunting, perhaps when it comes to the Japanese markets, and the rebound in Korea after that worst one-day sell-off in history. We are seeing extended losses of about 1.25% here in Australia. Nikkei futures pointed to a lower open.
AI is transforming entire industries, from automation to cloud computing. McKinsey even estimates trillions of dollars could be added annually to the global economy from AI adoption. But what does that mean for someone learning how to trade and invest? It means that having a solid educational foundation matters more than ever. So you can interpret how large themes like AI may ripple through the markets. This way, you're not just reacting to headlines, you're learning to evaluate them with actual context. I'm Felix Pre, and this is Winston, the brains behind it all. And we've worked as an investment bankers, well, me mostly, an economist, and also as a lawyer. And I spent more than 20 years in the financial world.
Futures pointed to a lower open. This is the Asia Trade. We're counting down to Asia's major market opens, and as the war presses on, April, we continue to see risk assets really rotating around this singular story about oil, the risks to oil prices, really the only story that investors care about at the moment.
Yeah, that's having cross-asset implications. Take a look at the way the dollar has bounced this week, along with Treasury yields as well.
Yeah, we hear from the Trump administration, of course, promises to look at all avenues when it comes to calming these oil markets, ideas ranging from Treasury trading oil futures, strategic reserves being released, and of course, what we heard earlier this week, insurance and armed military exports. But none of this is really reassuring crude traders and really broadly economists and investors concerned about the flow-on effects of higher crude prices to just about every corner of these markets and the economy. Take a look at how we're setting up, and we have been seeing indications of a fall at the start of trading, downside already being spotted. For the Nikkei 225, we're seeing off by just about over 1% there, despite, of course, an earlier rebound this week, perhaps the signs of some bargain hunting by investors, but that is looking like we're setting up for a pretty difficult session this Friday as well, these early declines. We saw US stocks and bonds falling. It has been a week of whipsaw action and sentiment. Headlines still at this point depicting escalating tensions in the Middle East. The topic's up by just about 1%. We'll be watching some of the tech names and the tech-heavy markets as well. Speaking of which, this is how we're trading when it comes to Korea. What a week it has been for Korean assets, with that one-day worst sell-off that we've seen in any day of trading for Korean stocks. And we are seeing a bit of downside there, 2% lower for the Kospi. Watching April, of course, a number of these chip names with this story about the mulling of chip permits from the US.
Yeah, and we are seeing potentially that's a headwind if you think about, the energy prices and the potential impact. Does that ever flow through into chip production in some shape or form? For the moment, it's really about the concerns on inflation from these energy prices, and you're seeing how treasuries have been reacting. So on the 10-year yield, you're still looking at 4.13 thereabouts, even though when it came to the US crude movement overnight, it popped above 80 at one point as investors repriced these duration risks on the Iran conflict. But you also had the reporting about potential treasury intervention for the oil market, so that helped to calm things down a bit. You're back below 80. Gold is interesting also, but maybe that's the read-through from the surge we've been seeing in the dollar. It's under 5,100 now. When it comes to the Fed's path, given these energy developments, Tom Larkin had this to say. Take a listen.
Obviously, you watch oil prices. While the U.S. is no longer a net importer, it's still the case that the price at the pump matters a lot in terms of sentiment, in terms of crowding out other spending. And so I'm just watching prices at the pump. They've jumped up over the last week. You can see that when you drive around. But of course, no one knows whether this is going to be short-term or long-term, and so we'll just see where it goes.
Let's bring in Bloomberg's executive editor for Asia Markets, Paul Dobson. Paul, the action we've been seeing this week, what stood out to me is that it's kind of flipped the logic of Asia outperforming US on its head. Where does this go from here on out?
That's a good question, isn't it? But you're absolutely right. This is the worst week for Asian stocks since 2020. So you can see that there's been a real big drawdown in our part of the world, whereas for the US market, down 0.7% so far this week, up and down a little bit. No sort of like real significant damage. But I think that speaks to the market that's been outperforming for most of this year. So people are booking profits, taking some cash off the table, momentum trade, unwinding somewhat, those kinds of vibes. So where does it go from here? Well, I mean, I think if you look at where the crude oil and LNG, for that matter, impact is greatest, it probably is in our side of the world rather than the US. The US, of course, is energy independent. It's an exporter of crude and of natural gas. So it has more protection against that than you can see in some of the Asian nations, which are much more vulnerable because of their imports of energy. And I think that may be something that people are taking into account when they're looking at the best places to trade. The additional thing to think about is that the dollar is also performing as something of a haven, so that's another thing that's separating the two markets at the moment. Okay,
what are we expecting for the chip makers then?
I think Joe, we've almost forgotten about about that, haven't we? Definitely US stocks were under pressure yesterday because of this news that there may be some more restrictions on US exports of chips to the rest of the world, and including our market. So we'll be watching very carefully to see how that plays out in nation space for the importers and the companies, and also for the likes of TSMC, the people that are making the chips as well.
It's also Jobs Day. I feel like we've almost forgotten. This must be the least anticipated Jobs Day in quite some time, but implications for yields in particular.
Peter Piper's pepper picking proved painful. So he ordered the supplies he needed from Amazon Business and positively prospered. Amazon Business, your partner for smart business buying.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
Yeah, I think it's an interesting one, isn't it? So the forecast is for quite a big slowdown from January's high numbers, 55,000, pretty neat looking number. I was quite interested to read one comment that said, well, given how sticky inflation is going to be because of what's happening in the crude oil market, better, at least from an equities perspective, if we have a strong payrolls number, at least then that would show that the economy is resilient and the Fed doesn't need so much to cut. I think from a bond market perspective, it's very difficult because the market isn't going to rush to price in Fed cuts with inflation sticky. So if we have a bad number as well, that points that sort of stagflationary kind of a picture. Looks like, we've seen that big backup in yields this week already. Basically, I think the 10-year is following what happens in crude oil and paying more attention to that perhaps than to the payrolls data. I think if you go back to Barkin, everybody is saying basically it depends. If this is done quite quickly and it's only a temporary sort of spike in the oil price, then things will return to normal reasonably quickly. But I think the longer that the conflict goes on, actually, it multiplies the impact that the oil shock could have on the rest of the world because the recovery would take so much longer.
Asia Markets executive editor Paul Dobson there with the latest. And President Trump says Tehran is calling to make a deal as the US and Israeli military campaign continues. Iran stepping up its barrage of missile or drone attacks across the Middle East. Let's bring Bloomberg editor in. What do we know about whether, in fact, there has been an attempt to reach out? Because the previous report had been denied.
Yes, hi. So, I mean, it seems that Iran, whenever this is mentioned from the US side, the Iranians are fairly quick to deny it. So that's sort of understandable in a way as well, because no one wants to be demonstrating any weakness. And I guess from the US and Israeli side, they sort of want to be looking at or suggesting that they're making progress there as well. But at this stage, it's very, very unclear. I mean, that would be going on behind the scenes. And certainly publicly, Iran hasn't been giving any indication of that. And as you mentioned too, Iran's barrage across the region really hasn't let up at all. So there's no real sign at this stage that there is any progress there, but these reports are coming into me shortly.
Mike, it's widening to the extent that, I mean, we're seeing warships in Iran and international waters beyond the Middle East that are also being affected. I wonder, what is your take on the extent in which some of these countries, including India, they can still continue taking a calibrated approach if this continues dragging on?
Yeah, it's really, really difficult for a lot of these surrounding countries, April, and whether it's India, whether it's the Gulf states, and just coming to the Gulf states. I mean, they're really under siege. I mean, it's not like, I mean, Iran is attacking US bases in these countries, and obviously the energy installations. But then we've heard desalination plants being hit. Obviously, oil is a hugely important resource there. Hotels, all this sense of stability that's been created in some of these places like Dubai is under threat. And then, as you mentioned, India, which has always tried to maintain a neutral stance. It's obviously a near neighbour with Iran. The warship being hit there after it had been in sort of friendly exercises, it just widens the whole, the whole conflict and opens up new fronts potentially as well. And that's I guess, what really starts to make everybody skittish about where this is going.
Mike, we've just had an estimate from CSIS, the think tank, saying that the first 100 hours of Operation Epic Fury has come at a cost of $3.7 billion. We know that Iran is being strategic when it comes to costs from its side as well. Does this give us an indication of, I guess, the durability of these operations, right? Who potentially runs out of money, because Iran's taken, in some respects, quite a clever budgeted approach to what it's doing around the region.
Totally, Tony. I mean, we're in a version of a war of attrition here. There's no question about that. What the weapons that the US and Israel are using are extremely expensive. They're obviously very, very targeted, precise, these sorts of things. And an Iranian drone can, they can do damage with a $20,000 drone, and it's requiring a multi-million-dollar missile to stop it. So there is a sense here that Israel mentioned that it had taken out 60% of Iran's ballistic missile launches, but nonetheless, it doesn't seem to be a slowing up. And as you mentioned, the cost of a drone or the ability to create a drone is a lot easier than stockpiling these sort of anti-missile defences, and that's particularly the case in the Gulf too, where they've only got certain numbers of supplies there as well. So there is a war of attrition, almost a race by the US and Israel to try and knock out these offensive weapons that Iran has that can create such chaos in the region. But then again, you've got Iran that doesn't have to spend the money and all the resources to keep on attacking.
There's got to be an easier way to find a credit card that's right for me.
Well, Credit Karma is here to help. You can browse your personalized records, see your approval lines, and bingo chichingo.
Find a credit card that's right for you with Intuit Credit Karma.
Parakeet and tiny pink cat goes everywhere.
Been using Upwork to hire a WordPress developer? We're going to try using Upwork AI. It's great that you can just write a couple sentences and they create the rest of the job description. We went from no job post to ready to post in about 5 minutes, maybe less. I'm so excited to get this project kicked off.
as we continue to watch these developments, we are seeing the United States issue a license to allow some Russian oil sales to India. We've seen this just breaking over the last couple of minutes or so. The Treasury also issued some policy amendments when it comes to Venezuelan origin oil to Cuba as well. But this is a pretty big developments when it comes to the US issuing a license to allow some Russian oil sales to India. So this clearly part of what we've seen from the Trump administration in trying to reassure oil markets on the supply side. We've also seen some of these other ideas being floated, including military escorts through the Strait of Hormuz, insurance, the Treasury potentially trading oil futures, the release from US strategic reserves as well. So we continue to watch these developments very closely for markets at least. We've got so many cross currents happening, but the risks to the upside for the oil price is really still front and center. More ahead on the Asia trade, this is Bloomberg.
All right, let's take a look at how the chip stocks are faring in the Asia Pacific. Didn't get a great handover from these developments related to the potential U.S. requirements of permits for the likes of NVIDIA or AMD to export worldwide. You're seeing a bit of a downtrend today, but this is also part of the declines we saw on U.S. stocks. Now let's get more on our Bloomberg scoop and bring in Asia tech correspondent Emil Drones in Hong Kong. Belle, talk to us about the potential approvals that these U.S. chip makers might be required. What do we know so far?
Yeah, well, this is a really significant, especially when you think about sort of the overall framework and the Trump administration scrapping the Biden era AI diffusion rule back in May of last year. So it's certainly the most substantive step now that we've seen toward any sort of global chip export strategy. But in a nutshell, if these rules do go ahead, the idea is that companies are going to need to seek US permission for virtually all exports of AI accelerators from the likes of NVIDIA, but also other companies, of course, like AMD. So we've already got curbs that are in place covering around 40 countries, but this is a global expansion. It's interesting, again, going back to that AI diffusion rule, because
morning, Mr.
the Trump
Clarence.
administration
God
had
bless
previously said that this was too burdensome.
Yo, Mr. Clarence.
But taking a formal role now,
Mr.
if it
Clarence.
does actually go ahead, is certainly
Clarence,
a very
I have
significant
new
step.
flyers
So what we
made. Give me
understand
your
is that
number
US
so I can send them
officials
to you.
have
I'm
written the
telling
draft
everybody before they
regulations.
come to print.
They are saying that they're
Give me
not meant to
your
function as an
cell phone
NVIDIA
number, and I'm going to text it to your
export
phone.
but
And
still, of
anybody
course,
you know
you
social
did
media,
see
just post it
NVIDIA
and let people know.
closing fairly
If I
flat, but
get
still
any
under
wedding,
pressure.
Sister
Intraday during the
quinceañeras
session,
from
AMD
you, I
likewise
got you with a
declined, as you
referral.
said. You are
So
seeing
I
some
got
of
you
those
with
major
20%. They give me 10,000, that's 2,000 for you. They give me 1,000, that's 200. Hopefully we get more, but yeah, I got your back.
About how this work practice.
Yeah, well, this is really going to depend essentially on how many chips that you want to buy. So what we understand is that it's going to involve companies, definitely in some cases their governments, depending on the quantities. So if a company wants to buy up to say 1,000 of NVIDIA's latest generation GB300 chips, that is a sort of a smaller size order, so then they could just have a fairly straightforward, simple review and essentially get the blessing of the US Commerce Department. If you're building a bigger cluster, then you might need pre-clearance, for instance. But if you are looking at something that would require north of 200,000 chips by one company purchasing those, then it does seem like the government in that country will need to get involved. So what we're understanding is that this framework is certainly not finalized. It could still be substantially changed. It could also be scrapped in favor of other priorities. But as I said, it is the most substantive step we've seen toward any sort of global chip export strategy since the Biden era AI diffusion rules. Whether or not it ends up being more or less restrictive, President Trump versus former President Biden, that part is still very unclear.
Adolfo was there with that top story. Well, President Trump is also facing a major legal challenge to the global tariffs he imposed after the Supreme Court struck down many of his earlier trade barriers. 24 states have filed a lawsuit saying the new policy is, quote, fatally flawed and must be overturned. Let's bring up Bloomberg Politics editor Laura Davison, who continues to track the complex journey of these tariff implications for us. We did have expectations that some of these other... As a business owner, I've got a lot on my plate. That's why I used ZipRecruiter to hire. The plan was to hire 2 people, but the candidate quality was so good for us. We did have expectations that some of these other potential ways in which the president wanted to put through tariffs after the Supreme Court decision would also be challenged. Is this the case here?
Yes, this is absolutely. So there's 24 states, and those are largely Democratic-led states, to be clear, that have brought forth this lawsuit challenging. These are these temporary tariffs, that 10% global tariff essentially that's set to last for 150 days. What's concerning for the Trump administration here is that this was the authority, this was sort of their option A that they turned to, that they would seem that the clearest that they would have the authority to move forward with this. We'll see this case is in its very early stages. We'll have to wind through the courts. It's possible that the litigation on this could last longer than the tariffs themselves, because those are set to expire this summer. But this is, a real blow to the administration after they had just 2 weeks ago the Supreme Court say that their prior tariff strategy wouldn't work. Now they're sort of working through the list of Plan A, Plan B, Plan C, and having legal challenges there could mean that we could really see a giant pullback of tariffs if the judges rule with these 24 states who have brought this case here.
So what are the exact options for the Trump administration and tariff tools that are left then?
Yeah, so the other kind of elements that they have are they can make the case that certain tariffs are needed for national security concerns or because there's unfair trade practices. Those take longer. They have to essentially do a report and study ahead of time and then impose those tariffs. So they've launched that process. They've said there's several sectors that they're looking at imposing those tariffs. But for the industry and for countries who may be affected, they have a little bit longer to recognize that there may be a threat here to try to get in front of that.
Are we in sight of refunds at all at this point?
It does seem that judges are growing frustrated with the administration's position in court on refunds. There was a judge who just chastised the administration's lawyers, saying that they needed to stop processing the paperwork for the tariffs that were deemed unconstitutional and stop calculating that, saying, look, you need to be focused on refunds. The administration has made the case that they may not be able to do this quickly, or that there needs to be that each company needs to sue in order to get their refund. We've also heard judges sort of musing in court that there's already a tariff refund infrastructure in place, that the administration should use that. So we haven't had an official ruling on exactly how this will play out, but we're starting to see lots of signs that at least the judges who this is in front of right now are saying that the administration needs to go ahead and start cooperating and processing these refunds.
Laura, thank you, Bloomberg Politics editor Laura Davison. Now, some other global headlines we're following: the U.S. and Venezuela have agreed to re-establish diplomatic relations, signaling President Trump's willingness to work with the new leadership now that he's ousted Nicolas Maduro. The State Department says it aims to promote stability, economic recovery, and political reconciliation. Interim President Delcy Rodriguez has struck a far more conciliatory tone towards the U.S. than her predecessor. President Trump has removed Kristi Noem as Homeland Security Secretary after months of controversy. She's the first cabinet member dumped during his second term. Noem faced bipartisan rebukes during congressional hearings following a federal immigration crackdown in Minneapolis that saw agents kill 2 U.S. citizens. Trump says Oklahoma Senator Mark Wade Mullen will take over by the end of March. More ahead on the Asia trade. This is Bloomberg.
Take a look at what we're watching when it comes to the cross-asset picture in the US, and as we have assurances from the Trump administration to keep that supply of oil going, we have just had news, of course, the permission for further flexibility for Russian oil sales to India. We're seeing S&P futures looking a little bit positive at this point. The dollar rising again in the previous session on a jump in oil for a third day this week. Crude prices had topped about $81 a barrel in the US, to the highest since July 2024 in the session. We saw a decline across the rest of the G10. Watching yields as well. It is a payrolls day, and we're seeing that potential risk for yields of further increases on the jobs numbers. Richmond Fed President Tom Barkin says the central bank's responses to the war with Iran will depend on the duration of the economic impact. They told us exclusively that separately from the war's impact, solid US productivity growth is helping contain inflation.
2.8% on the last 10 or 20 or 30-year basis is a really good number. And I think we are seeing companies invest in productivity and deliver it. Some of that technology, AI, but I think a lot of it is you were caught short workers 3 years ago. You invested in new processes, new staffing models, automation, and people are seeing the results of that.
That holds down inflation.
It does hold down inflation, and it allows people to maintain margins at times when their input costs might be coming up.
Well, input costs are probably going up for people who use petroleum. So I want to start there with, obviously, the Iran war just started, but what's your gut feel about how that's going to impact prices and the economy?
Don't have any sense on how long it's going to take or what the implications are going to be. Obviously, you watch oil prices. While the U.S. is no longer a net importer, it's still the case that the price at the pump matters a lot in terms of sentiment, in terms of crowding out other spending. And so I'm just watching prices at the pump. They've jumped up over the last week. You can see that when you drive around. But of course, no one knows whether this is going to be short-term or long-term, and so we'll just see where it goes.
Well, back in the 1970s, we had the oil price shock, and we had gas lines that people were miserable and having to pay all this money, and so the Fed eased into that. That turned out to be a mistake. Does this put on hold ideas for the time being of continuing to cut rates?
I think we'll go meeting by meeting, and we'll see what we see when we get there. Gas prices, obviously, if they're up, that is inflationary. Textbook monetary policy would be you look through a short-term shock, but you don't look through a long-term shock. And I think that's a lot of the assessment people are going to have to make.
Well, the Open Market Committee, before the Iran war started, basically the view seemed to be that we're at peak tariffs now, and inflation will start to come down in the latter half of the year. But you throw this into the equation, where would you put yourself in terms of thinking about the progression of inflation and when you might have enough information to decide whether a cut is worthwhile or not?
Well, we'll have to see how it evolves. If you go back to the fall, the conversations I have with businesses suggest to me that they believe their pricing power is very limited. Consumers are exhausted by inflation, affordability. People are pushing back, whether that be not purchasing or private label or trading down to lower price retailers or repairing rather than replacing. And so in the conversations you do have a sense that we're on the backside of this inflationary period and we'll head back to normal. And the numbers in the fall, absent the government shutdown, we're saying much the same thing.
For more than 75 years, we've been giving professionals the tools and opportunities to move finance forward. Because the future of finance depends on the standards of those ready to lead it. CFA Institute. Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
Richmond Fed President Tom Harkin speaking exclusively with Bloomberg's Mike McKee, and we've just heard also from the Treasury Secretary of the U.S., Scott Bessent, pretty much reiterating that the U.S. will issue a temporary waiver for Indian refiners to buy Russian oil. This will be a 30-day waiver. He anticipates also India will ramp up purchases of U.S. oil. This is Bloomberg.
Officials from China's central bank, finance ministry and market regulators are due to face questions later on Friday after the National People's Congress set down a modest growth target and emphasised the need for greater self-sufficiency in technology. This comes as Bloomberg reveals US officials are drafting new rules to curb AI chip exports, requiring government approval for sales anywhere in the world. For more, let's bring in Scott Kennedy. He's a senior advisor and trusted chair in Chinese business and economics at CSIS. Scott, always great to chat with you, especially during NPC week, of course. And, this Bloomberg report when it comes to this potential permits and approvals from the US is really interesting, right? Because we know that so much of their chip-making, policy-making revolves around attempts to try and curtail these Chinese ambitions.
Certainly, the U.S. policy for the last several years has been oriented toward de-risking and slowing down China in the most advanced areas of technology, particularly on chips. This is not a surprise to Beijing, to say the least. They have focused like a laser beam on addressing their shortcomings with chips, semiconductor equipment. They're not quite there yet. They still have a ways to go. They'd like to be able to get access to some of these chips while they make this transition, and that's something that's been raised in the government work report. It's in the new 15th five-year plan. This is something that will be essential to Chinese policy for quite some time.
This would potentially, well, unsurprisingly, would potentially be a game changer in terms of greater global visibility as to where this technology is going, right? Does it change the implications for Chinese firms, particularly those that are trying to get access to this technology, to these AI chips overseas?
Sure. I mean, I think the U.S. is thinking, the Trump administration has had sort of two different voices on this. One is let's sell what is safe to sell because that helps maintain American technology leadership. And then there's the argument that you really need to slow the Chinese down, that they're making too much progress and they're using a bunch of loopholes to get access to chips in a whole variety of different ways. And that debate inside the administration keeps going back and forth. And so the news that we've heard today may not be fully implemented eventually. I think President Trump's trip to Beijing will have a lot to say about how this all turns out.
Scott, there doesn't seem to be quite a coherent policy from the US on chips exports in the past couple of years. I mean, is that your assessment? Do you agree with that view? And how much of an advantage has this left the Chinese players?
Sure. I would say the U.S. has gone from a policy of small yard, high fence to a slightly larger yard to not sure what the shape of that yard should look like. So I think you're right that policy has, to be nice about it, has evolved. At the same time, as policy has evolved, China is moving. So we've seen the Chinese make progress on memory, on other types of chips, on fabbing, on semiconductor equipment and tools. And the policy really was oriented around a China which was significantly behind in all areas in which the U.S. held all the cards, and in which the U.S. was cooperating with its allies very closely. And so those are not what the landscape looks like right now. And so I think it would be useful for Washington and its allies to do a full-scale reassessment of the pluses and minuses, what worked, what's not, and then decide how to move forward with a China that looks like in some of these areas they are increasingly competitive or have enough quality that they can still be competitive in various areas of AI and other technologies where you don't necessarily need the fastest level of computing.
What are the drivers you've been seeing for tech self-sufficiency out of the NPC?
Sure. I think the Chinese have been highlighting a few things that they want to do. The first is in terms of being able to double down on those places where they've been successful. Electric vehicles, robotics, renewable energies of all sorts, and then address those choke points. The second area, and that would include semiconductor equipment at the heart of that. And then there is areas of greening the economy, of reducing carbon emissions, and those advantages. I think the other thing is that China is really good about investing and building up industries, And this government work report focuses on the need and the challenge of consolidating industries, of creating a national market, of promoting mergers and acquisitions, of having tighter budget constraints, so that once you get successful industries, they're not weighed down by a bunch of companies which should have failed, still existing, surviving, and weakening the economy. That's another really important part of their tech policy going forward.
I was just about to ask about overcapacity because, as you say, this is a playbook that we've seen with the likes of solar, right? Have the decisions of the policy making and the investments been smarter this time around?
Well, we're really going to have to see if that's the case. You know, one of the interesting things about government work reports and these speeches is they're very self-laudatory, right? They praise how successful China has been. But if you go into this report, Premier Li Qiang is really honest about a lot of mistakes and problems that exist in various companies, in various industries where demand does not meet supply.
TurboTax locations are now open in your neighborhood. So, hand off your taxes to an expert today. Now, local experts do your taxes with 100% accuracy.
You can afford to dream big with Credit Karma's all-in-one money app. Find ways to take your credit scores higher. Get a bird's eye view of your spending and savings, along with personalized recommendations for stellar credit cards and loans. Make your financial dreams come true. Download Credit Karma now.
Government behavior. These are all huge challenges, which is why the growth rate, I think one of the reasons the growth rate was lowered. So I think they've identified, I think, correctly the problems. I'm not sure if they've got the policies to match the level of the challenges. The policies look relatively
Oh my love, everything is perfect. You are the secret to my success. Thank you so much. The love is Leah.
Rather than a real revolution to fully rebalance this economy and address problems at their core.
Scott, good to have you on the program today. Thank you for your time and analysis. Scott Kennedy, Senior Advisor and Trustee Chair in Chinese Business and Economics at CSIS. Now, we're also watching China ahead of the Open, and in terms of futures, this is where things are. But also, take a look at this chart because we want to talk through some of the moves that we've seen in mainland investors yesterday selling the most Hong Kong stocks in a single session on record. Our Asia equities reporter, Charlotte Yang, joins us now for more. Charlotte, this southbound selling is really quite something. Put things in perspective for us.
Yes, we saw really heavy selling from the Chinese mainland traders of Hong Kong shares yesterday, which they have sold on a net basis 27.7 billion Hong Kong dollars. And that is the biggest selling in a single session in the history of the Stock Connect. And there are a couple of factors, strategists are telling us that may explain this flow. So for one, Hong Kong shares has been more sensitive to global fund flows versus the mainland market. And as the conflict in the Iran drags on, that makes Hong Kong more vulnerable. And also with the strengthening of the yuan, as well as we have the NPC that has provided more policy stability, and also some of the sectors that are close to hard for China to boost their tax self-reliance, such as hardware tech stocks, and those sectors are more listed offshore. So that has also boosted the appeal of the onshore stocks versus Hong Kong. And this is not good news for Hong Kong if it continues, because the mainland traders has been a really crucial source of support for the Hong Kong stock market. Last year they bought a record amount, and to be sure, this year year to date as of yesterday, the Chinese mainland traders, they still have bought over, I think, 100 billion in Hong Kong stocks. Worth of Hong Kong dollars worth of stocks. But I think if this trend continues, that would create pressure for the key indexes of Hong Kong.
Tech remains a major policy and economic priority. Do we see some winners there?
Yes, so given the policy priorities yesterday when we saw it, some of the chip makers shares tied to that sector is getting onshore, and then going back to that flows we're seeing from Hong Kong to onshore. We've been hearing investors that some of them are now falling out of love with those major Chinese internet companies and the likes of Alibaba and Tencent, but going into those hardware sectors, going into those chip makers. And I think for today, a key thing to watch is how investors will react to JD.com earnings, which is this e-commerce provider, but that has reported its first quarterly loss in 4 years due to the competition in the food delivery field. And I think one of the reasons why investors now they're not that fond of the Chinese internet cats is because of this competition concerns, whether that is in food delivery, like you see with JD.com's earnings, and also last month with Meituan talking about how it may report the biggest annual loss in years, and then or be in the AI field, which we're also seeing competition picking up, with how ByteDance is such a strong challenger and companies are spending big money on it, well less in the US, but still spending pretty sizable money on AI, but not turning it into earnings growth quickly enough. So all of those factors are things people are considering for whether they put money into the Chinese AI stuff, and the reactions for JD.com is one key thing to watch.
Charlotte, thank you for the context. Bloomberg's Asia equities reporter, Charlotte Yang. Now, in terms of Asia stocks, we're also watching the early goings in Japan and South Korea. You're seeing Korea continuing to pair the earlier declines. The Kosdaq has been outperforming, and as futures jumped, we saw briefly the Kosdaq program trading being halted. More ahead on the Asia trade. This is Bloomberg.
Plus cryptos, countless stocks and ETFs, and options. eToro has it all. eToro empowers you to mix up your portfolio like never before, all in one intuitive platform. Join the multi-asset revolution. Dive into investing with eToro, a NASDAQ-listed company. Start today.
Looking to hire medical staff, tech support, kitchen help, freight management, you name it. ZipRecruiter delivers candidates with the right skills and experience fast. So fast that 4 out of 5 recruiters who choose ZipRecruiter with a quality candidate on day one. ZipRecruiter uses powerful matching technology to find the best talent for your business. Spend less time searching for quality candidates, more time growing your business with the right people. Find who you're looking for faster. Try for free at ZipRecruiter.com.
Our soldiers are prepared for any scenario. When I said we are waiting for them, it didn't mean that we are waiting for continuation of the war. No, but we have prepared ourselves to confront with any scenario, with any eventuality, any possibility, and we know that we can handle that.
Iran's Foreign Minister Abbas Araghchi telling NBC News the country is ready for any scenario in its war with the US and Israel. Let's take a look at how oil prices in the US contracts are faring, following on from some of these lines crossing the terminal about the US allowing these waivers for India refiners to take on Russian energy. You're seeing it moving even further from the 80 handle, but don't forget, this is a contract that's climbed about 17% so far this year. Let's bring in our Asia oil trading reporter, Rongwei Niu. Rongwei, talk to us about the potential market implications from the US allowing India to take oil from Russia.
So we're seeing oil prices actually climbing up a lot this week. And for the OPEC to allow India to purchase Russian barrels is just one of the few moves that the Trump administration has came up with to alleviate the oil price jumps this week. Now, I guess the most significant of all wouldn't be this OPEC license to allow India to purchase Russian barrels. India has been squeezed for supply, although traditionally since the Russian-Ukraine war, India is one of
Future Tech Plus, published, baby. Saturday at Victoria.
Shifted away
This is what I do.
trade talks with Washington.
Now,
So they've actually
gotta reach out to the fan band
so they're really hard hit right now
with
because
today's
this war comes in the midst
motivational,
of to securing more Middle Eastern supplies.
motivational
so it's,
element.
unsurprising that perhaps India has rallied to
So,
given some
let's
concessions
go
to do
with
so. And the US has allowed them to actually take in these barrels. This also kind of shows what the administration is doing to help refiners like those in India to sort of spruce up their supplies amid this crisis. And it could be a sign that conflict may not be ending in such a short duration as they initially expected.
Okay, so interesting signals from the Trump administration. What other things can the US do to alleviate prices? You highlighted some of this, alluded to them as well.
Right. So one of the other key concerns faced by Asian refiners is, of course, risks of carrying oil through the Strait of Hormuz. So that's the primary reason that has been driving up supply risks and crunches here in Asia. Of course, the Trump administration had said earlier.
This is what I'm talking about. This is what fuels me right here. This is, I feel like myself again. And I'm going to give you guys some reflections. It's just, I'm kind of overwhelmed in a sense. And, you know, it's important. It's very important, you know. Very, very important. Give me one quick second.
However, it's unclear how the US plans to step in to bring back these insurance covers or potentially bring in the Navy to escort these ships through the passage amid such a wartime.
What else should we be looking out for?
Right, so as I've alluded to when I was answering the first question, I think the duration of conflict is still on top of everyone's mind. With what it stands, we are seeing a slew of moves from the US administration to alleviate oil prices as we're coming to the end of the trading week. We do have to keep up on what's happening in terms of the military escalations over this weekend, whether any direct oil producing facilities hit, and developments in terms of how the US could step in to alleviate the traffic and the risks for tankers transiting through the Strait of Hormuz.
Bloomberg's Asia oil trading reporter Ron Wei knew that. Well, Bloomberg opinion columnist David Fickling is pointing out that the Strait of Hormuz is a hidden risk to the AI economy. David joins us now for more with his latest piece, and David's a fascinating correlation as to why this particular sector, chip making, has a lot to lose.
Yeah, I mean, sure. We've
Let me do a quick reflection, and then I'll reach out to my business partners because I have to multitask, so I don't have a choice. We got no business till Monday, as I'm doing, so it's a sabbatical for me.
More than half of memory chips in the world are made in South Korea. About 70% of the advanced processing chips used in smartphones and data centers are made in Taiwan. And those countries are two of the countries that are most exposed specifically to LNG from the Gulf. They're not the largest importers, but as a proportion of their grid power, and as a proportion of all the LNG they import, each of them get more than a quarter of their LNG from Qatar and the UAE, which is affected by the Straits of Hormuz, and each of them uses between 28 and 40% of gas in their grid. So if you see any continuing disruption through Hormuz, there's a real risk to the stability of their power grid from what we're facing.
Good lesson was focus on great business and great neighborhood.
So let's say one deal was
But the hard lesson is don't put yourself in such a
in a
precarious
little bit of
position
time,
that if the
a
weather
better
outside
deal
gets tough, you're at risk.
came about.
Watch Hard Lessons,
So
a new series
I speak about this famous investment, right, which is one of the catalysts why I started to write this. Right? This particular deal started like that
more
somewhere
responsive
north
to
of
changes
$12
in the
million,
markets.
maybe
Powered by
14, 15 million.
450 billion daily
We
data
ended up
points
losing the
and
deal,
backed by
right?
research from
But
hundreds
the
of
deal
global
was inflated
experts,
to almost
delivering
double the
benchmarks
price. It
driven by
went
the
up to the
markets,
bid
not
went up to like
opinions.
22 to
Bloomberg
24
Equity
million.
Indices. Get evolved
At the
benchmarks for
time,
today's
it
equity
seemed like a huge
markets.
loss. It seemed like, what the heck are we gonna do?
David, there's a lag
Within,
though
I'm
on
gonna tell you
energy
exactly
and
how many
the
years. I
impact
wanna
on some of
say
these chip makers, right?
17.
When are we likely to see the effect showing up?
Within 4 years, it turned into
That's right. I mean, sailing
$225 million
times from the
of
Middle
a
East
new
to North
opportunity
Asia are about a
that could
month.
have never happened
So nothing's
if
really going to
that deal
happen
had gone through.
for about a month because
Plus,
those cargoes have already cleared
everything I learned in the
almost.
process.
There's
What
also
I learned in the
inventories,
process
but those
is more
inventories are quite
valuable
small. South
than
Korea
the
has less than
$24
2
million
months
I may have
of
lost in the
LNG
beginning. But
you know,
then
supply
it was
capacity.
quantum growth.
Taiwan has less
It
than
was
a
not
month
just
of supply
200 million,
capacity.
it's like
And utilities,
$225 million.
as we speak, are already casting
So
around to
it's
secure
10x.
cargoes from elsewhere.
Just like
But
an
the main
investment
benchmark in the region, the
into
Japan-Korea
the stock
market,
market,
the LNG
just like an
benchmark,
investment
is up about
into any
65%
Fortune 500
since
company.
Friday. And I think
And at
that's,
the
I think it's
time,
contributing to
it
some of
was
the
so
market turmoil
painful
we've seen in
because
those
I
countries.
didn't
This,
understand.
again, since Friday,
Part of the
the
reasons
Koski's down
why things
12%
fell
or
through
so,
is because
TAIEX
this
is
is what
down
happens. This is the
5%.
power of God. So my
Could
business
they have
partners
hedged
put
or
these deals
contingency
together
planned away
outside,
from these
like
problems?
outside of our partnership.
Well, obviously, I write about the energy
They
transition a
did
lot,
it
and
through
I think it's
manipulation and
notable
deception.
that
They
these
thought they
very
were getting
LNG
over our
dependent
system or
economies in
getting
North
over
Asia and
on
Japan is another
our
one.
partnership, right?
Have really,
But the
they have some
problem
of the
is,
highest costs of
I've been doing
renewables in the
business
world,
for a very,
and
very
a lot
long
of the
time.
reason for that is
None
that
of this
they
is new to
have a
me,
lot of
right?
counterproductive
So I've
regulation,
always
making it
had
quite hard.
multiple business
Taiwan
partners. So
closed down its
one
last
thing I
nuclear
learned,
power plant
and
last
one of
year.
my advantages as a
Parliament passed a
business
law
partner
that
is
effectively
that I'm the type
outlaws
of business partner
utility
that's going
scale
to
solar
support you.
last year.
Even if you have an
The
investment
previous government
outside
in
of our
Taiwan was
investment,
similarly very
I'm not going
opposed to
to
renewables.
water
If you
down
go to these countries,
or
you'll see the there is very little
misappropriate
wind or solar
my
on the grid.
perspective of
If
whatever
you
you're
want
doing.
to have an energy
So all my
secure,
business
resilient
partners
economy in
understand
the face of
if I'm
these things that
busy
you
with one
depend on a lot of
investment
imported energy,
or one
you need
portfolio, one
wind, solar,
project,
and
they
nuclear.
understand that
Korea
as
has a
soon
lot
as
of
I get
nuclear.
this done,
Taiwan
I'm going
has
to go
none.
back
Neither of
and
them has a
handle
lot of nuclear,
whatever
solar, and they've
these
been far too
investments
slow
or
to
this
take it up.
portfolio needs.
Compared to we've
So all
seen
my business
since
partners have always
2022,
given
since the
me
Ukrainian
flexibility,
invasion,
like, oh, you're
Europe
building
has
something new, cool.
pushed
You know,
forward its
handle
efforts
that, and
to
whatever we need,
to
we'll
scale up
continue
a lot
to
of that
build
stuff.
bridges. That's my
China,
mentality.
indeed,
So
domestic coal,
these two business
domestic wind and
partners
solar has also scaled up its efforts.
felt
These countries, which
guilty
are vital links,
because
vital nodes in the
they
global economy,
bit off more they
have
could
done
chew.
far too little, and maybe this
They
is going to be
couldn't
the
close the
wake-up call
deal. They still
for that
had
to
to
change.
bring it to me. So now they were at my
David,
mercy.
great
Of
stuff.
course,
Thank you,
me being a
Bloomberg
good business
opinion
partner,
columnist
I'm like, don't
David
worry about it.
Fickling.
We'll
Now
make
we
it
have
happen.
breaking news crossing the terminal
Now,
as well.
not only
The Pentagon
was it
says
kind of
that it's
messed up
formally
because they
notified
tried to
Anthropic
exclude
that
me,
it's
then
determined
they
the company
included
and
me
its products pose a
because
risk
of
to the
necessity,
U.S. supply
right?
chain. This is according to a
The
senior
deal fell
defense
through because
official,
they
and this
got
is
into an
pretty much
argument
escalating the
in front
dispute
of the
over AI
loan officers
safeguards.
for JP Morgan
Anthropic
Chase.
responding, saying that it sees
Thank
no
God,
choice
thank God,
but to
I
challenge
removed myself
the
from the
DoD,
investment.
the Department of
But it goes to
Defense,
show you,
in
not only
court,
had they
and
drunk business
to
partners
challenge
in
specifically
outside of my
the supply
control,
chain
outside of my knowledge,
designation.
because there's three of us, so they
We
have
will
two
bring you
votes
more
over my
of that when we
vote.
get further details.
But
This is Bloomberg.
all of the piranhas that came in after the sharks to bite all the little bits and pieces, the arguments in front of the loan officer were about the piranhas eating besides the sharks.
Top
And the
corporate
power of
stories
God
we're
was like,
tracking.
no,
The U.S.
because
Securities and
the
Exchange
owners of the
Commission
shopping
will
center
end its
said they wanted
lawsuit
more
against
money.
crypto billionaire Justin Sun.
Then it became
The
a
SEC sued Sun in 2023, alleging he committed securities fraud and billed investors by working with companies he owned and controlled to sell unregistered securities. The SEC will drop all claims against Sun under the settlement plan.
We had a
Oracle planning to cut thousands of jobs as it handles the cash crunch from the massive AI data center expansion effort. Sources say job reductions may be implemented as soon as this month, affecting roles that are needed less due to AI. Chairman Larry Ellison is leading a historical build-out of data centers to power AI workloads for its clients, including OpenAI. Adani Total Gas has tripled the prices of gas supplied to industrial consumers as the war in the Middle East increases fuel availability. Sources say the company raised the price of gas to nearly 120 rupees per standard cubic meter, up from 40 rupees
for users
Right
above a
before
threshold.
this investment,
Indian
and
gas
again, this
consumers
is me
are
looking
grappling
back now
with
at
limited
43.
supplies
I'm
after
looking back
Qatar
like, wow,
halted
I
operations
can't
at
believe
its
that.
Ras Laffan
They started e-commerce business, and
Hey, Ro, take a look
we're
at
into hardware
watching
software.
when
I'm a
it comes to
technology
the
company,
continued
right? So
downside
they
that we
had a
see
chip deal,
across Asian
right?
markets. Equities
This
really trading to the
business,
downside across
this
the
e-commerce
extending those losses
business
by
took off
1.2%. A lot of cross
immediately. I'm talking
currents in
about
terms of the
within the
news headlines
first
that we're
30
following,
days,
including
they made
reporting
back
into
most of their
potential
investment.
US
And this never
permits
happened
for
before. So
some
this
of these chip-related
overconfidence
names. That they'll be
led
in
to that
focus
business
today in
falling
terms of
apart
how that
because those two
restriction could
business partners
potentially
fell out of it
impact
because money.
what we see there. The Nikkei 225
Now,
off by
to
0.7%, really
overcompensate, they go for the
reversing some of the
shopping
rebound
centers,
that we
which
saw
is
yesterday.
that's my specialty,
Australian
right?
stocks weighed by some
Same
of these
thing
energy
happened.
names. We are seeing
Throughout the
1.3% lower there.
process,
Watching
I'll give
India
you
in
other
particular, the
examples. There
US
were
issuing a
people
license to
in
let
different
some
industries and
Russian
trades, right? They
oil
would come
sales
in
through
with
there. Will be
proposals
one
in
to
his office,
watch.
and I
This is
realized
Bloomberg.
I have made a habit of making millionaires that are ungrateful. So they fall from their own weight. It's their own greediness that doesn't allow them. If they close a $5 million deal, they can't close a $10 million deal because they don't understand that growth. So from 5 million to 25 million, yo, you got to know exactly what you're doing. And sometimes God makes it that way for a reason. Even though at the time I couldn't understand, the same thing happened. So when we sold that franchise, right, we sold that business, I cashed out. What I cashed out was worth more than the deal that we lost. Again, power of God, right? And I have been developing the technology arm from the engineering firm. So out of grace and mercy, I still offered them. I said, listen, I'm going with this technology stuff. Do you guys want to come along for the ride? No, that's not what we want to do. We want to do other things. Yeah. All right, great.
Imagine being able to build anything
You sure about
just
that?
by thinking about it.
Now fast forward
Base
2024.
44,
Who
a
still owns
complete
the
AI
technology
creation
company?
platform
I do.
made
Who
for
still owns a
anyone with an
multimedia
idea
company? I do. This
and
is
a
a small
drive to
investment in
bring
my
it to
entire
life.
portfolio. Whatever they invested
Describe
in,
what you want.
whatever they tried to do, as a matter of fact, they wound up splitting lanes. Like they bumped
Bloomberg
heads so
Tech
much that
is
they
live from coast to
chose
coast
to, one
with
person wanted to
Caroline
business
Hyde
with
in
somebody
New York
else,
and Ed
same
Ludlow
result,
in San
failure,
Francisco.
complete failure, and the other person is stuck
This is
in
Bloomberg
this
Tech.
vortex
Coming up, Bloomberg reports
where
the US
they
Commerce
don't
Department has
identify
drafted
themselves
regulations
personally outside
restricting
of the
AI
business.
chip shipments
So
to
they're
anywhere
willing
in
to
the
stay in
world
the business
without
because
American
of ego and
approval.
pride.
Plus,
Just
Oracle
because
plans
that's
to
what they
cut
identify
thousands
with,
of
not
jobs as it handles a cash
understanding that the
crunch
growth
from a
is
massive
quantum.
AI data center
See, in the
expansion
beginning
effort.
of the investment,
And the
I
Pentagon
didn't
has
want to sell
officially
them.
notified
I said, now
lawmakers
we're
that
going
it
to ride
has
this thing on
determined
out to the end.
Anthropic
We're
and
going
its
to pass this
products
on
pose
as
a risk
generational
to
wealth.
the US supply chain.
I didn't understand
Some
quantum
extraordinary
growth. I
news
wasn't
on the
thinking
private
heavy.
sector
I
and
wasn't
indeed on the
thinking
public
long-term.
markets right now. And we're seeing
So,
ourselves off by about 0.75% on
the
the
same
Nasdaq
thing
100,
happened.
coming off of our lows, but we're down on
Everything
the
that they
week. The
build
S&P
with their
500
hands,
having
they
its worst
destroy
week
with their feet.
since October of last year. And in
There was
large
nothing
part,
that
it's
I
because
could
of
have
what's
done. I
happening
just
to
had to
oil
let
prices.
God
And we're in a sixth day of
do
conflict
what God
with the
does
Middle East,
best.
with Iran, and we're seeing
Now
oil up
looking back,
6%. At one point, we're now, of
even
course,
though it was a
eclipsing
painful and
$91
hurtful
on the
moment in
Brent
my
on the
life,
global
it
contract.
became
All of this
45
adding
books
to
for me.
inflation pressure when we're
It
seeing
became
weakness in the labor
learning
market, non-farm
masterclasses.
payrolls,
It
a
opened up
surprise
so
loss in
many
jobs, no
opportunities. All
additions.
the people
We're
that
also
were
seeing,
involved
therefore, money
before,
coming out
during,
of
and
some of
after,
those risk
same
assets.
situation.
Bitcoin off by
All the new people that
3.6%
came
today.
in
Ed, what are you looking
towards the new
Yeah, chip
real estate
stocks are
deals
under
and stuff
pressure. The
like that,
Philadelphia
I
Semiconductor
wound up
Index is down
firing
in this
a bunch
session,
of them.
down
Why?
on the week and headed
Because
to two
now
straight
I
weeks
was
of
able to pick
declines
up
for the first
those
time since
personality
November.
traits and
Bloomberg
say,
News
okay,
is
if I
reporting
can't trust you
that the
with
Commerce
$5 million,
Department
I
has
cannot
drafted
trust you
new
with $100
rules
million.
that would
In order
restrict
to
US
impress me, you got to
shipments of
talk about a
AI
deal
chips
25 to
worldwide,
$40 million.
giving Washington
Period.
broad authority
And now
over
they
whether
know that.
other
They
countries can
understand
build
the value now
facilities
that they
to
don't
train and
have
run
a
artificial
person on their
intelligence
team
models. That's
that
all
can
according
handle that.
to sources. Bloomberg Tech American Industrial Policy
God.
Reporter Maggie
I didn't
Eastman
intend for it to
joins
be that
us
way. I didn't
with the
design,
latest. Let's get
engineer for it
into
to
the
be that way.
content of those
These are
draft
just
rules and
things
what
that
Bloomberg's
just happen.
reported. What do we need to know?
Sometimes in life, we have to.
Of course, so as
take a
we've
moment to
reported,
reflect
there
and
is a license requirement for
what really
AI
has
chips
happened.
sent almost anywhere
Because time will
in the
pass.
world. Now,
You
whether
see,
or not
it's
these
one thing when you
licenses
have a
will be
perspective,
handed out
right? Let's
depends
say
a
you have a
lot on
business
how
partnership
many
that lasts
chips
3 to 5
as
years,
compared
or
to
even 7
a
years.
Blackwell,
But
NVIDIA
then the
Blackwell. How
friendship
many of those chips
is 10
does
years,
each
15
end
years
user
after
want to
those
purchase?
5
And now
years. So
on the
after
higher
time,
end,
all
for
that
end users
tension
wanting
is
to purchase
nothing.
up to
Because
200,000,
now you have
that
to
may
see me for
actually
the rest of
require,
your
and
life.
the US may ask
Now you know
nations
every
to
time you go
invest
to the
in AI
ATM and you
within
pull out
US
$20,
borders.
you're
So this
gonna
opens
remember
up an
the guy that
opportunity
made you a
for chip
multimillionaire.
licenses to become a
And the
factor
great
in global trade
opportunity and
talks.
blessing that God gave
Something
And
that
then
I'm sure
remember the
many
guy
a
that
country
told
would
you, yo,
bristle
whatever
at,
you don't
Maggie. What's
appreciate,
interesting
that's gonna
is that the
take away.
Commerce
Oh, you don't
Department
believe
has
me?
responded,
Okay.
and they
You
say
on
the
your high
draft rule
horse? All
isn't
right.
meant
You
to
on your white
function
horse,
as an
right?
Nvidia
All right.
export ban. Can
What
you just give us the
happens
nuance
when the
of how
horse
the
doesn't
government has
run
responded
anymore?
to your reporting?
Think about the
Right.
entrepreneurs
So this
that
response shows
during their
and tries to
position
emphasize
of
that
privilege
this is
and power
not the same
did
as the
so
Biden
wrong
administration
to their
and their
colleagues, their
diffusion
business
rule.
partners, their
It's
employees,
one thing is it
everybody
is not
involved,
based on countries.
clients,
However,
product
there is
services,
a
industries,
big
and
role
trade.
here that the government is
Then
playing
time
as a
progresses, the
gatekeeper.
investment is no
And
longer
whether
there,
or not this
and
is
all
more
the doors are
restrictive
closed.
is ultimately going to depend on how the U.S.
Business is not for
decides to
everybody.
dole out these licenses.
And people
And it
think that
does
it's
have the
cool,
leeway to
but
be
this is
more or
hard work
less strict
24/7,
with that.
especially me. I own a technology company.
Maggie,
I have the
an
internet and a
important point
computer.
here is it
I'm
doesn't
stuck at
necessarily
work all day,
change
every day,
US
24/7.
policy with regards to China right now. You
But
outlined that. But there
looking
seems to be
back,
like
just
this
like
tiered
Steve Jobs
response.
always
If it's a
said,
small batch of
sometimes
chips for
only
a
when you
small
look
data center
back can you
project,
connect the
lighter
dots and say,
review.
wow,
But at the other end
the
of
guy
the
wasn't
extreme
punishing
in our
me. He
reporting,
was
it seems
protecting
to
me
indicate
from
that
the
you have
heartbreak
a
that I
nation
would have had
state, country to
if I would have
country
brought, you know, the
negotiation
bigger
if the
investment
US is going to
and
allow
face the same
the export
situation.
of cutting
Because at the
edge
time,
AI
I couldn't
accelerators.
think about bouncing back from
Exactly,
losing that
as you
kind of
say,
investment.
for any shipments
Now
over
I understand,
200,000
okay, if that door
Blackwell
closes, God
equivalents,
just opened
there
up
will have to
12,000
be
more
a
doors. Now I have
nation-to-nation
to just keep
negotiation,
knocking on
and
doors
it
to see
is
which
sort of a
one
tiered
is
response.
the one
If
for
it's
the
under
success.
1,000 chips, that's
Dan
going to be a
Daniel,
lot
which
easier
is
to
my
get
uncle,
approval. But again,
he
as
always
you
says
work
that
up the
you have
chain
to
and want
kiss a
more
lot
and
of
more
frogs.
chips,
You don't
the
know
US
if
is
it's
going
going
to
to
be
turn
asking
into
for
a
more
prince or a
in
princess.
return.
You just have to
Maggie
keep trying. You
Easton
have to
on
give
what the
every
US, we
business
understand,
partner
is
an
currently
opportunity. I
considering.
always start
We so
people at the
appreciate
center.
it. Now let's stick with
You get a
global
certain
tech
amount of
news.
love,
Ted Watterson
respect,
is with us. He's
understanding
Baird Managing Director.
at
He
that level.
oversees
Now it's up to you
technology
to keep yourself
research.
there.
Boy, is there a lot to be
Only
trying to
your
digest
actions
as
can
someone
make
who
me
analyzes tech right now.
diminish
Just focus
how
in on
I
what
interact
potentially
or
the
how
US
I
could be
engage.
thinking about here. And overseeing
Most
basically
business
how Nvidia
partners
and
don't
AMD
think about
export
it
to
that
the
way.
rest
They're
of the
not thinking
world.
long
Your
term.
reaction?
Even if I'm
I
investing
think it's a
short term,
broader focus.
I know that
it
long
also,
term,
let's
the
face
relationship,
facts.
the personal
the
bond
Trump
with that
administration
group of people or
is
that person
providing a broad
is going to be
blanket,
far
not only on
greater than the
energy
investment.
policy, look what we've done in
So
Venezuela,
all of
look what we're
the
doing in Iran right now,
emotional
but also on rare
baggage,
earths. This all feeds together
you
in
could
one
throw
big
that in the trash.
ecosystem. And I think they
So
just want control of what's
I'll give
happening
you
on the
another
next
example,
generation
and maybe we
silicon
can close out with this for
at
today
that
because I'm going to
3
go
and 2
check on my
nanometer
churches and
node.
charities, then I'll be back in
This
my
is
office. I
one
got
of
to
the
link up with
reasons
my
why we
family,
built 8
and we're going to
fabs
be
at
busy
TSM
all
in
weekend.
Arizona. We have to
There
control
was a
that
deal that fell
technology
through
specifically at that 2
about
nanometer node
2 or 3 years
because
ago. I
that's
want
where
to say
all the
about 3 years ago.
AI chip
3
development is
years
going.
ago, I took
So I
possession
think they're
of
just
the
trying to get
world's
their arms
most
around the whole
exclusive Ferrari
situation
collection.
that
That is
the
my
U.S.
portfolio.
is in
That
more
is
of
my claim to
a power
fame. That's the
solution
home run, right?
first being ripped off
Do you
globally.
know that the
Power
collection
solution
has
first. I mean,
only grown
at the moment, we're
That's
seeing
all
a
it's
negative
done.
reaction to the stocks on the back of that
without
story.
any
In fact,
additional
very few
effort,
stocks are in
without
the green
me,
today, and
you know,
maybe
being bitter
Marvell
about
and
deals that
Broadcom
fell through.
outperform because
So
of numbers.
the group of
We see
people
defense tech
that
outperform. Ted, what do you do in
betrayed
this
me
current
to sell about
geopolitical
100
moment of
cars,
tension?
no more than 200 cars.
So
right?
I'm on with
This
some
betrayal
very big
was about 3
clients,
years ago,
you know,
over 200 or 300 cars.
constantly, whether
We
it
just
be
broke
during the
every
day
record
or even at
here
night
in Florida,
lately during
in
earnings.
Kissimmee,
And I
less
think
than 2
what
months
people
ago.
are doing is we're
$75
kind of
million
post
Ferrari,
last Saturday,
yours truly.
and there's not a lot of cycle
$62 million
experience. I mean,
Ferrari,
I'm old, so
personal
I've
car.
seen pretty much all this. It doesn't
$1.5
really
million
surprise me
Ferrari,
that much.
yours truly.
But we're now in this, I would
$19.4
call it a
million
capital
Enzo, yours
preservation
truly.
phase,
Here in
where
Florida,
when you
here in
don't
Kissimmee,
have
where
you
this
know
is not
a
Dubai,
clear picture
this is not California,
of what
this is
could
not
happen, whether it
Vegas,
be on the
this is not New
commodity
York,
side,
this is
the rate
Florida. We
environment,
broke all the
you
records
tend to
right
go to
here.
a capital preservation mode. And what I mean by that
Imagine
is
how those people feel.
there's a lot of
You let go of
de-risking going on in tech
everything
portfolios,
God
and there's
gave me
been some very
to take
violent
the
moves
sand
between
and squeeze
software and also
You go to the
semiconductors. And I think there's also
take
some
the sand,
PMs that
right?
are, quite frankly, just moving
Take
to
2
other
full
sectors
fists of the sand.
that are a little bit more
Squeeze it.
defensive.
So,
This
so
is my
you know, Caroline
You
outlined
squeeze
right
it so
at the top of
hard
the show
that when
the
you
sort of
open your
trajectory of the
hands and the
Nasdaq
wind
100,
blows,
right? I think on
sand
track
is
for
gone.
its worst week since October. Then I said
Because you felt
chips
that
are
it was
following a
all
similar
about the sand. It was
back-to-back
all
weekly
about this is my
declines
sand, this is my sand, this is
for
my
the
sand.
first time since November.
But you don't realize
It
God gave you
seems a
the
strange
beach,
question, but
the
what is the
boats,
main
the jet
catalyst in
skis,
this market right
the
now?
ladies
What is
selling
it
the
that your clients are
sandwiches
saying
in the
is
internet
driving
cafe,
their
the people
psychology
playing
when you're on the phone
volleyball,
with
the
them?
old people riding their
They
bikes,
need
the
clarity.
kids playing with
You know,
the,
everybody's looking at the
with
10
everything
year. I mean,
around them.
it
You
reversed
didn't
down to the
realize that was
412
giving you the
range
whole
earlier
thing.
today.
But
Now
your
it's back.
focus
Last
was,
time I
let me
checked it, in the
squeeze the
417
sand.
range.
It's all mine.
They're worried about a potential
This
spike in
valuable
rates.
lesson
There's
is a
inflation
lesson these people
everywhere.
will
In
have
tech,
to
every
learn
single
for
conference
eternity.
call I'm on, and I
Because
listen to over
this is what
70
made
during
them the
earnings
characters
season.
of my book.
Everybody is passing on
Those
price.
books live forever.
So I think the institutional
Nobody could say,
investor
God
is
didn't give me the
looking
opportunity,
at
God didn't
locking
give me
in
the chance,
gains
it
on
wasn't presented to me,
some really
whatever.
leadership
Because they thought
stocks,
about selling those
building some
100
more
cars,
cash levels
which
just to
on
be
average,
more
those
nimble,
cars are
buying
probably
from the
200,000-300,000.
fearful, selling to the needy is a discussion
How
I
do you
have
feel when
almost
you're
every
inside of
single
a $7 million
conversation.
Ferrari?
And then the other things that
It's not the
portfolio
same as a
managers are doing is they're
$200,000 Ferrari, I'll tell you
upgrading their
that much.
portfolio.
If you have
And this is a
issues
great
sitting inside
opportunity
of
when
that
the
car
markets are down
with
to
somebody
really
that's
look
supposed to
at
have
these
your
A
back, that's
companies
supposed to
with
be your business
unbelievable
partner, right?
management
And you guys are
teams,
having conflict
product
about
cycles that
selling
move
the car,
into
trading the
agentic,
car, leasing the car,
and
whatever
free
it is,
cash flow is
or
king.
renting the car,
And
whatever.
if you do a screen
Imagine
on those
when it's a
names,
$7
there's a
million
bunch
car.
of tech companies that are way off
Imagine
their
when it's a
highs,
$20
and that's
million
where
car.
that's what we're doing most of the
Or
work.
$100 million car. You
It's
think
actually the
customer
S&P
service is
500,
going
I
to
think,
decrease or
that's
it's going
having
to
the
increase?
rough week
Of course it's
relative
going
to
to
the
increase.
Nasdaq 100.
Because
One
that
name that
clientele
is having a
does
very good week
business
is Palantir.
in a very
You know, it's up
special,
almost
unique,
13%.
and personal way.
And that's like logical, right? Like Caroline was making the point, I think it was Monday, maybe Tuesday,
Valuable
that with
lesson
everything
for
that's
these
happening
people to
with the
have
war
learned.
in
And not
Iran,
only
and
is it
indeed
an indirect
the back and
lesson
forth
of life
between
and business
the
for them,
Department of
it's a
Defense,
direct
the
lesson
Pentagon,
for all
and
of us as
AI
entrepreneurs.
providers, that you'd expect that name to be higher.
You never know
you'd expect it
how
to be
much
in the
potential
spotlight
or
right now.
energy something has.
It truly is one of these next generation companies that has
Everybody
been
has
put
a
in
number.
pretty much
And if you
every
can't
single
overcome that,
agency. They
you're always
started
going to
with
be
the Army,
limited to
but
that
they've
number.
gone to
So
the
anytime an
Space Force,
investment hits that
the
threshold,
Navy, pretty much every
these
single industry. And if you
subconscious
just connect
personality
the
traits
dots
are going
on
to come into
our
action.
success in
Being a lawyer, for
Iran
me,
is
in
based
business is
upon
extreme advantage.
Palantir
Being
being
an engineer,
embedded
being a
in
doctor,
the
being an
IDF, the
artist,
Israeli
being a serial
Defense Force,
entrepreneur, being a
as
public
well
book author
as
is a
all
huge
of our,
advantage in
pretty much
business.
I would assume all of our
My
agencies in
mentality is,
relationship to our
I'm Kobe Bryant,
Department of War.
I'm LeBron James,
This
I'm Michael
gives the
Jordan.
war fighter, and
When I
flew
join your
for
team, it's
a
to
lot
win
of years,
championships.
and
I don't
I
think
feel
about
so
any other
antiquated
language
on
other
what
than hitting home
my
runs and
new
winning
naval
championships.
aviators have at
Most
their
people
disposal.
don't
They
look
can
at
see
things
around
like that. They
corners.
don't say,
They can see
yo, I have
the
Kobe Bryant on my
battlefield
team,
in
or
real
I have
time,
Michael Jordan
and
on my team,
that's
or I have
really
LeBron
because
James on my
of a
team.
lot of the
You know what
Palantir
most people say?
software and their
Isaiah
ability
Thomas.
to
I have Jordan on
really
my team,
take on an
don't pass me the
immense
ball.
amount of data and make sense of it.
I have Kobe
I
on my team,
love hearing about that history and that
assist me.
understanding you have, Ted. Can
I
you
have
therefore
Shaq on my
opine a
team,
little
let
bit
him do all
on
the work.
how difficult it might be for them to unentwine themselves, it's even a word, with
That is
Anthropic?
today's
Because Palantir
value
has had a
lesson.
partnership with them. If we are
And what
seeing
I
the
wanted to
full
share with
sound,
you guys. So
is that going to be an issue
today's
for the
article,
business?
Future Tech
I
Plus,
think it's a really
deals with all the
political. I
marketing
think at
campaigns,
some
and I'm
point
talking about
the
from the point of
Defense
view
Department
on the
and
surface,
the
because
government
I'm actually
will need
addressing
Anthropic,
most of my
and
loved
they'll
ones,
find a way of
because
somewhere in the
they
middle.
were part
Same thing with
of the
OpenAI.
bridge between
OpenAI.
these
If you
deals
go back in
coming
the
together,
Wayback
falling apart,
Machine,
coming
I mean,
together, falling apart.
this has
Before,
happened
during,
at
and after.
Amazon. It's happened at Google. It's
Now
happened at Microsoft.
everything is like
We'll
when
get there
you shake a
somehow.
bucket of
What I
things,
think
right?
every
Everything
your
is now
viewers need
settling
to
in,
understand
and reality
is the U.S.
where's the
government, specifically
trajectory
the Defense
of all of this
Department,
collective of
needs
people?
the best
They have no
technology.
direction. They have no guidance
I think
because they
what
didn't
we're
have it in
using
the
is
beginning.
kind of a strong
And if they
arm
haven't
tactic
learned
to
the
get
valuable
them
lesson,
back
they're
at the
going to
table
repeat the same
and to
thing,
get some
directly
to
or
some
indirectly,
ground.
consciously or subconsciously.
Ted Wardenton of Baird with a
So for me,
very close
this is still
view
day
of what's
one.
happening between technology and the
In the
world, the
actual
state of the world
article,
right now. Really appreciate it.
what are
Now,
we
coming up in
talking
the
about?
program,
Organically.
Oracle
Apple
plans to axe
with the Neo,
thousands of roles as soon as this month. We're going to discuss what is behind that
256
move and the
gigabytes
Bloomberg
for the
reporting.
$599,
This is Bloomberg Tech.
512 for
Peter
the
Piper's peppermaking
$699.
proved painful,
I need all new equipment.
so he ordered the supplies he
Perfect
needed from
opportunity.
Amazon Business.
Better equipment, better hardware, software,
And
better
positively
products and
prospered.
services, better things that we can create.
Amazon Business, your partner for smart
These
business.
people are not thinking like that. It was
Life
more
is
important
better
to them to
with
hold the
options.
sand,
Your investments
grip it
could be
with
too.
all their strength and might.
Versatile trading
They
products
open
and
their
global
hands,
data.
win,
Cboe
lose,
gives you the
everything.
tools to trade in any market environment.
I cannot wait for all the new rollouts for all the new marketing campaigns. We have a new Mandalorian going to theaters. We have a new there's a new Spider-Man movie coming on the way. So guess who has that marketing campaign? We do.
Oracle is planning to cut thousands of jobs as it looks to manage a
Avengers,
cash crunch driven by AI spending.
I saw it
according
yesterday.
to
I
sources.
checked. I
Let's
need
get
to
the
double
details
check.
from
I
Bloomberg's
think
Brody Ford.
that's going to come
who
out
broke the
later
story.
in the year.
Lots of detail
So
in the report.
all the
the
marketing
size, the scope,
campaigns
the when.
have to start
What do we
now,
need to know?
especially for films. So
It costs
if
a lot
the
of money
rollout
to build
starts
data
today,
centers,
really it started
right?
yesterday.
Oracle is betting its
a
company
little
on
after
the fact
midnight
that
for
it
the new
will be an
Spider-Man movie.
AI infrastructure
Then
provider.
I'm
And
already
over the next
thinking
couple of years,
to
that
run the
means negative
Mandalorian
cash flow.
and the
It's
Spider-Man
feeling a crunch,
marketing
and so
campaign
it's
together.
responding, right?
But
It's planning
we also
what
have Taylor
appears to
Swift.
be
That's
one
a
of the
huge
largest
campaign.
layoffs on record
So
for
by
the
the
company.
time
Thousands
we're
of
able
workers
to
impacted as soon
start
as this
promoting
month.
for the
And yeah, I mean, it
for the
is
DC
certainly
universe,
a
there's a
rough
new
market out there for jobs in the
Superwoman
tech
movie
industry.
coming out.
And this is just one
We'll
more
start to
data
do the
point for
rollout
that.
for Doomsday. Because
Brody,
we already did
it needs money
a
for
few
AI
basic
and
rollouts
the infrastructure
before.
of it. It needs less people
So,
because
of course,
of AI.
tinsel
And
time,
if
the
you
talk
say
of the
that the
town.
job cuts are going to be coming to those where
has left Disney, but
I
he's still
assume
working in the
the latest,
background.
greatest
So
AI
I don't know
agent
how
is
much
going to be
time.
able to perform for them.
Again, all part of the rumor mill, not
Exactly.
my
Yeah, I think every
But this just
management
gives you
team,
an
I know
example.
everybody
If
who
these
has a
Fortune
P&L
500
is being
companies
asked,
are
hey, when you're
dedicating
doing your
this much
headcount
time
planning, let's
into their
think about what
rollouts.
roles we need
What is
less
one to
of.
say about us
We all
small
know these
business
AI
owners
tools
and
aren't
entrepreneurs? We're
quite
a
there
small
in
family
terms of
from the church, a
replacing
military
people, but in
family,
terms
well
of
invested
time
into this
saving,
entire
in
community.
terms
We
of,
have business
hey,
investments
maybe if you
everywhere
had a
in
team
Japan.
of 10 people, can we do it with
If
8
this is what
people?
Fortune
From
500
what we
companies
are
are
hearing
doing,
from
this is what we need
sources,
to
that
do.
is certainly
If
a
they have
factor
better
in this
hardware,
layoff,
software, we
though.
need better hardware.
At the end of the day, it's cost cutting.
If they're
I think
improving
that's
or
the big story
changing
rather than it being
their
AI is so amazing
approaching
that we can
things,
replace people.
then
Yeah, the
the
nuance
same
of whether it's
thing
AI washing
is
or
true
not
for us.
continues.
We need to
Exactly.
adjust, we
Brody
need to
Ford,
pivot,
thank
we
you
need
so
to
much for
do.
joining us on that
We
story.
need to
Look,
see
another
how
tech
we
leader
can
has been acknowledging
improve
the
things.
impact of AI on jobs.
And
PagerDuty
a
CEO
lot of
Jennifer
it
Tejada.
comes
I
through
spoke
an
with her at
education.
Bloomberg's New
It
Voices
doesn't have
event
to be
earlier this
formal.
week, where she said
You know,
AI's
library
impact on
cards are free. Last
productivity
time I
is
checked.
changing the way her
So
company fills vacant
always make it a
positions.
point to
Yeah, we've
add
tried
to
to
that
move the word
personal
backfill from our
education as part
vocabulary
of your
because that
industry and your trade.
sort of
So you can
infers
see how
that
the
you need
market is
something
moving. So
exactly
you
like
can
what
see
you
the
have
growth
before.
and
And the
not
market is moving so
focus on the
fast that by the
chaos,
time
the
one
lack
person
of
exits a
control,
role,
the
you
noise.
actually need to think
You have
completely
to stay
differently about what
focused.
the opportunity is to add
When you look
capacity
at
to your
things like
team
entertainment,
in a new way.
you
So
can't
are you
compare it to
seeing
technology.
fewer
It's
people
like
working
those
at
people
PagerDuty, and how
they
does
wouldn't
that
survive 1 second in
perhaps
technology
change the conversation you're having
because
with
they're so
employees?
emotional.
Well,
Computers
I
are not
think
emotional.
employees
Zeros and
understand
ones,
that we're
on and
looking
off
for each of
transistors.
them
That's
to
it. That's all
demonstrate
a computer is.
not only
So
productivity and
if I write a
efficiency,
program and the
but
program is designed
higher
to
velocity in the
help you
innovation.
make a better
And I stand
oatmeal
up at town
cookie,
hall almost every month and
it's
say,
always going to do
I'm
it
not
because
asking you
that's
to
what it
work
was
more.
designed to do.
I'm not asking you to work harder. I'm asking you to work
It's not
differently.
going to
I'm
focus
asking
on
you
what the
to
market is
embrace
and
and
what the market
leverage
is not.
AI in service
It's
of
up to the
competitive advantage,
entrepreneur
but
to
mostly
build
in
that
service
bridge
of our
of
customers.
understanding with the consumer,
Right? And
to
I
build
think
the
that's
bridge for the
exciting
potential
for most
of
employees.
having a
That
point of
was
sale or a
PagerDuty
point of
CEO
transaction for any
Jennifer
type of deal.
Tejada.
Doesn't
Now,
matter
US
the product or
employers
service.
did
We're all digital
unexpectedly
marketing
slash
at the end of the day.
92,000
People
jobs
don't
last month,
understand.
raising the unemployment
Nor are they
rate
willing
to
to
4.4%.
take the time
Those cuts are
to
being
read a
blamed
book.
on strikes at major healthcare providers
If you're not
and
willing to read a
servers,
book,
whether
how are you
not
willing
AI.
to make $10 million?
How much longer could it be until
You're not
AI
going to read
does
a book.
impact
You're
to the
scared
labour
of
market?
this.
Martin Gimble,
You're
Executive
intimidated by
Director
this.
at the Yale Budget Lab,
All the
has been doing
information is here.
research on AI labour market impact. He joins us
Look, I opened it
We
perfectly.
every
Chapter 3.
week,
A master in
month,
the
and
student.
quarter
It's
wait for
all
the
of it
definitive
right
data
here.
set that says
What do you need?
AI is doing
I'm going to
something
show you
here.
basic tools that you can use.
Have you seen it yet?
It's called
Will we see it
a
soon?
notebook. This is the original iPad. This one doesn't lose charge.
So focused on what the technology can do because the technology
You don't need a
is
stylus
so
because
amazing
you can use a pen.
that they're jumping straight
These are fairly
to,
affordable.
and therefore
Less
we're
than
going to
$1
really quickly see these labor
Everything
market
else God's given
impacts.
you, all these
And
thoughts,
it's really
all
important
these
to keep in
concepts,
mind there are
if
a
you
lot
don't
of things
put
that
them on
affect
paper,
deployment of
they're not
technology.
tangible.
IT policies,
You can't use them for
economic
anything.
pressures,
If it doesn't
demographic
have a
changes,
goal or a
liability
deadline,
concerns.
it's not a real
And
thing.
so the question isn't just what can the technology do, but how quickly
This
is
is not just for the
society
video.
going to, and companies going to rearrange
This
itself
is for
around.
merchandise. This is
News
clothing.
is that,
This
you
is
know,
for the toy
the
line. This is for
unexpected
the Hot Wheels.
cut to jobs
This
in
is for
February.
video
That's the
games.
news. That's
This is for the
driving markets
documentary, the
today.
series,
Within the
behind the
data
scenes.
set, did you
Just
see
this
anything?
one thing
Did you
branches
say,
off
okay, what
so
can I
many different
put
things.
from this
So
into
this
my
is
own
not
model.
just engineering for Chevrolet.
Yeah,
This is
when you
not
look
just
at this
selling
data,
Ferraris.
I mean, strikes did play
This
a role,
is
so we should see those
completely
jobs come back.
phenomenal.
But even if you take the strikes
Working on the
out,
video game
about
system
50% of the
opened
job
up so
loss was
many
in goods
doors. Why?
producing
Because
sectors as
the
opposed to
merchandising
private service providing
department
sectors.
works
So things like
hand in hand.
manufacturing,
So a movie
construction,
becomes
mining,
a
and logging.
series. And a series can
Those
become
are
a sitcom.
not
And a
sectors that we
sitcom can
expect to
become
be
a comic
affected by
book. And a
AI in the
comic
same
book can
way.
become a book.
And
And
for
a book can
context, right,
become
they were
another
about
series.
50%
And
of
another
the
video game.
cuts, but they're
And
only
that's how it keeps
60%
going.
of employment.
That's how you build
And
the
so
brand.
that doesn't
Consistency.
suggest that this is
Fluid
AI. It
dynamics in
suggests that
everything that you
maybe
do.
have impacts of
Most people
tariffs,
are not
plus
willing
just some
to
general
do the
cyclical
work.
weakening.
So
But yeah, we
make
saw
sure
in information
that
about
you are one of
11,000
those that
jobs
is
gone
putting
out
the
of
work
those
every single day.
92,000. Can you tell us
And that's
what
it.
data points we should
When
look
you
at
draw,
then?
you give it your
If
best.
it is going to be
Nothing
about
is guaranteed.
productivity
God
gains,
doesn't owe
if
me
it is going
anything.
to be
God
more
doesn't owe
about
you anything.
different
Nobody
areas
owes
that
me
are
anything.
starting to see the impact of an AI agent, for
You
example.
take everything away from me
Good lesson
today,
was focus on great
it
businesses,
was all
great
God.
neighborhoods, and stay calm.
You
But
give
the hard
everything to me
lesson is
today.
don't put
It was
yourself
all
in
God.
such a precarious position that if
Regardless
the
of
weather
who I
outside
am, I'm
gets
just
tough,
a
you're
vessel.
at risk.
There were many opportunities in my life that all the stars aligned. Not
Equity
because I
indices
wanted to,
built on
not because I
opinions.
engineered it,
That's
not
the
because
old
I
way.
thought
The
about it,
new
not
way
because
is
I had the
Bloomberg Equity
information. It just happened.
Indices built using transparent
So
rules.
I have to live in my
Areas
truth.
that
There's
are
no other way
starting
for
to
me
see
to
the
explain
impact
it.
of
All my
an
books,
AI agent, for
conversation
example.
style. All my masterclasses, conversation
One of the
style.
things that
All of
I've
my
been
digital
looking at is
content,
how quickly
conversation
the
style.
just
My podcast, my
composition of
radio style.
jobs in our
All
economy is changing.
conversation style.
Because we gain and
Because
lose
just
jobs all
yesterday,
the
I was
time. That's a
just
pretty
yesterday I
standard
was starting
part
from zero.
of an economy. And
As a matter
so
of fact, that's
just
one of
because
my
we
nicknames.
lose jobs in one month, it
Started
doesn't
from
mean that we should
nothing.
immediately assume that
Still
it's
building.
AI-related job loss.
Still have the
But
hunger,
if we're
the
losing
hunt
jobs
to go hunt
predominantly in one
these
sector
opportunities.
or a couple of sectors that are
Most
unusual, that
entrepreneurs
look like
run
AI,
out of gas.
that's a signal that maybe this is starting to happen.
The
And that's
worst
why,
thing is
you know,
to
at
set
Budget
and
Lab,
say,
we've been
yo,
tracking
the
this,
only thing I
you
know.
know,
It's
measure
the
of
only thing
occupational
I understand.
distribution every month.
I don't
And it
speak that language.
still
I don't
isn't
understand
really
that language. I
flashing
can't
anything.
relate to that language.
I
I
think
don't
it's
want to be
really
around
important to
people that
separate
think
out
like
the
that.
vibes
If you have
on
a small
AI in the labor
mentality, you
market
cannot
from
be a
what's
part of my
happening in the data.
at all.
And
If you're not a
I need
dreamer,
you
if
to
you
see
don't have
broad
goals, if
agreement
there's not things you want to
that
do
it's
and
not
aspire
in the
for
data
in
yet.
life,
You just
then
saw a
I don't even
report
want
from
to have a
Anthropic come
conversation
out yesterday saying,
because you're a
yeah,
dream
we're really
killer.
not seeing macroeconomic
There are
impacts here yet.
dreamers that build and
Vibes are
they're
one
builders.
thing,
And there are
but
dream
Jack Dorsey
killers
saying
that
he's cutting half
just
of his
destroy it.
staff is a
You
data
give them a
point.
perfect opportunity,
And yes, we
they
can
just
say whether there's some
destroy
AI
it.
washing within it, but still there are
And it
executives
starts with
saying
small things.
we are
It
not
could be a parking
backfilling,
space.
we are
It could
using
be,
AI. We are
this is my
cutting
this,
half of our
this is
staff
my
because
that.
we think
No,
AI
we're
is
the
at a
business
cusp
manager.
where we can
This
do
is
more with
our
it, Martha.
whatever.
When does that
This
start
is
to leach
our
in?
decision. This is our choice. This is
Do you
our
think
style.
tracking CEO
We're going to
statements
do
is
it
not
this way
the
for these
ideal
reasons,
way
for
to
the
look at
collective.
this for a couple of
I don't want to see
reasons?
things how I want
Right.
to see them.
One is there's huge
I
selection
don't
in
want
who
to see
even
things how
makes
you
a
want to see them.
statement about
I
layoffs.
want
Your
to see
partner
things
store down the
as they
street
are.
is not
Let the
issuing a
winning
statement every time they
ideas,
lay someone
the
off.
best ideas,
There's
propel us
selection
forward.
effects in whose statements
that
get
have the
covered. Right,
strength.
the statement from Jack Dorsey was,
Everything else
very
is a waste
eye-catching,
of
and so
time.
it got picked up.
Whether you realize it
And also,
now
frankly,
or in the
CEOs
future,
have
because time is going to
incentives
pass.
to talk about things in a
Things are
certain
going to
way.
change.
Shareholders
What
want
you
to
perceive
hear
as
that they're
success today
making
may be
AI
completely
investments
different
and
tomorrow.
driving
What the
productivity.
market is today will be
And they may not
completely
even
different
have a
tomorrow.
perfect sense
Technology
of
changes
what hiring would look
every
like
few
in
hours.
the absence of
I
AI.
remember
And so I
when
do
it
think
was every
it's a
few
moment
months,
where,
every
yes,
few
we should
weeks. I
listen to
remember
people
when it
about
was
what's
every
going
few
on. We
weeks or
should
every few
listen to
days.
CEOs.
Now
But it's really important to go back to
the data and make sure we're taking a really data-driven approach here rather than following the latest company announcement.
And that is why your data approach is so important. Some of the research you do is just great. Go and read it. Labor market AI exposure. What do we know? For example, Martha Gimbel, executive director and co-founder at the Yale Budget Lab. Now coming up, SoftBank in search of $40 billion to fuel its AI ambitions. More on that next. This is Bloomberg Tech.
Harder you work, the more successful. If you want the easy mangoes that fall off the tree, fully ripe, perfect, ready to go, so you can make ice cream, you're not going to go very far in technology. I gave the example of Radar Flex. When I first designed Radar Flex,
raised $658 million for its closed-end fund designed to give U.S. retail investors access to private companies. Robinhood CEO Vlad Tenev joined Open Interest. Just take a listen.
Put millions of dollars,
Robinhood
and I
Ventures,
saw
a
it burn
closed-end
to the
fund
ground
listed on the NYSE
because they had
that
stolen one of my ideas.
invests in private companies. The idea is
And
we
God was
raise
like,
the capital in an
You don't
IPO,
have the parts.
and then we invest that capital in private
A lot of these
companies.
people that
And
walk away
so
from
far, we've
certain
got a
investments
portfolio
2 years ago
frontier names
have all
in their
made their way
industries.
crawling
You
back.
mentioned Bricks, Aura,
Is there another
Percor,
opportunity?
Revolut, Ramp.
I'm going to keep you.
Those are just
I'm
some of the
gonna keep
companies
you
that are part
I'm
of
going to
this
keep you on the
portfolio.
colleague realm. I'm going to
Plus
keep you on the
Uber.
family
Well, it has posted job listings that suggest the rideshare company is stepping up efforts to test the subscription offering for drivers and couriers around the world. Now, the move underscores a sharper focus on subscriptions as emerging competitors lure drivers with flat fee models. And SoftBank, but it's seeking up to $40 billion from banks to help finance its investment in OpenAI. Now, that's according to sources. The roughly 12-month bridge loan will be underwritten by 4 lenders, including JP Morgan Chase. And SoftBank has been unloading assets, in fact, including its stake in NVIDIA, to bankroll its growing bet on OpenAI. But Ed, it's an interesting time to be wanting more banks to be syndicating debt at the moment exposed to AI.
Because credit pressure is building on SoftBank in particular, but broadly, a 12-month bridge loan. And remind yourself that $40 billion is their largest ever US denominated borrowing.
Isn't it? Also, within that conversation, we're hearing from Vlad Tenev and Robin Hood. On one side, people still wanting access to private markets, but then we have today the news around BlackRock and its private market credit fund and having to say, look, you can't keep taking money from it at the moment. It's really extraordinary move.
Absolutely not.
Yeah, we've been on top of it all week. That credit story is not going away. Okay, coming up, we're going to discuss the data center threats in the Middle East with Sam Winterlevy of the Carnegie Endowment for International Peace. That's next. It's halftime. This is Bloomberg Tech.
Data points, 450 billion data points every single day in the market. And this is what I eat for breakfast all day, every day. By the time most people wake up, I've been trading stocks for 12 hours already. I've been in and out of the international market since yesterday.
Switch to a TurboTax expert.
There's no way
$150.
you can compete with me in business. The only competition I have is myself. And I do have.
Welcome back to Bloomberg Tech. This is what markets look like on Friday to end the week. There's a lot going on in the context of Bloomberg's reporting on the tech sector and the war in Iran. The Nasdaq 100 is off session lows, but down 0.8%. Bonds have kind of been wavering. You see the US 10-year yield at 4.4%. Interestingly, like a lot of pressure on the Nasdaq 100 in the moment is coming from some of the mega cap names. I was talking with the team, Caro, on the equities desk, like what's going on? There is some kind of stabilization in memory pricing, for example.
What you put into success,
we know that
what
there's
you get out
a
of it.
recalculation in recent days of capital expenditures that impacts some of the hyperscalers. But you look at Apple, Meta, Tesla, Amazon, those are by on a points basis the biggest drags right now. And not that much of the news flow beyond. It's just I guess a volatile week politically speaking. And as we went through its head, there's a lot that the market needs clarity on.
Yeah, let's talk about one of those stories, politically speaking. Anthropic vowed to legally contest a Pentagon decision that declared the company a U.S. supply chain threat, a designation typically reserved for foreign adversaries, capping off a very turbulent week in the AI race. Bloomberg's Shrink Farah joins us now. For more on the unfolding AI saga that you have been at the forefront of reporting with for at least a week now. It was last week where we first saw the explosive conversation around being deemed a supply chain risk, and now it's coming right.
When we pick up, we'll continue with engineering.
That's right. And Dario Amodei, the CEO of Anthropic, also put out a memo yesterday saying that he believes that the order is narrow in scope to the effect that it won't actually impact hopefully business with customers who are not the government or working directly with the Pentagon. I think it's going to take a while to figure out exactly how customers react to this.
We're going to go back and
cross-reference. A few places that we've looked over recent days. Interesting. There's the sensor tower data
and of course,
on uninstalls and downloads. And there's the app stores. And like as part of the Q&A newsletter, right, we're going to look at this idea that there have been changes in ChatGPT, OpenAI's tools in terms of downloads and uninstalls. And then Anthropic, what do you see?
Yeah, so it's really interesting because Anthropic's cloud business has historically been more enterprise, especially in the past year. And
I haven't
now we're
even
seeing
finished my
a shift
coffee.
to sort
Wait
of
till I finish that coffee. I'm going to be going back. So
Stetson
Stetson in the house, you know it. The best engineering teacher ever. Holla at you. Peace out. And don't forget, dreams come true. All right? All day, every day.
So
All right,
now
God
those
bless.
gains are up to $1 million.